Well, hold on a second. There you go.
All right.
Did I have myself muted for the last couple of minutes?
You did. I was just typing in, are you there? I couldn't hear anything, and then I became the
Oh,
presenter.
okay. Okay, hold on one second. Guys, I need to back up just a little bit. I'm gonna steal the screen back from you, Chris, because
Sure.
I do need to do, you
Yeah.
guys could probably see the disclaimer for me. So hold on one second. You do have to have this on, oh, I'm kind of embarrassed now.
It's
Sorry,
okay.
guys.
It happens. Good old technology. I'll unshare my screen, I think, or I
No, it's
am
okay. I
there we
got
go.
it. I got it. Okay. Okay, guys, I just needed to tell you the disclaimer, and you should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. Please take notes and write your questions down, but hold all your questions till after the presenter is finished. And then I wanted to bring on Chris Vermeulen of Technical Traders Limited with BAN EFT trading strategy and how to profit from it. And Chris, you're probably going to have to tell us what BAN stands for. Most everybody may know, but some may not. Chris he's been involved in the market since 1997, and he's the founder of technicaltraders.com, thetechnicaltraders.com. And he's an internationally recognized technical analyst, trader, and author of the book, Technical Trading Mastery. Chris has developed trading strategies that incorporate technical analysis, position sizing, and risk management to boost performance while reducing portfolio risk. Thank you for hanging in there with me, guys. And now we're going to have Chris be the presenter, and take it away, Chris.
All right. Thanks, Sherry. Let me just get my screen up here. All right. Can you see my screen?
I
All right.
can, yes.
Perfect. Okay. Well, thank you for the introduction. Let's jump right into it. So today, guys, I am going to teach you my band trading strategy and how to profit from it. It's focusing on sector rotation using ETFs, and I will explain what the band means through this webinar once we get rolling here. So let's jump right into the slides. Thank you for doing the disclaimer, so we can skip that. But we're all here as traders. The reality is 99% of traders will fail to be able to trade long term. I just read a report that 99% of people who are day trading will never really be able to do it full time. And it's funny, as you start to become a slower trader, like you go to momentum trading, it's around 95% of traders. Swing traders, you can be around 90% win rate in terms of being able to trade for the rest of your life and not losing. And then as you work your way down to the slower and slower processes, you've got better luck of winning, but you do have to ride some pretty big roller coasters in the market. So what I'm going to show you today is how to become that 5 or that 1% of the wealthy traders that can pull money out of this market year after year, avoiding major market crashes, locking in gains while the market could be trading sideways or down. And that's really the whole point here, is to do something very simple, very slow, very, very conservative. And when I show you, and I'm going to teach you the exact strategy how to do this, once you nail it down, you can apply leverage and you can take it really far to the upside with potential gains. So let's just take a look at what the band strategy ETFs look like. So for example, this was last year. SP 500 NASDAQ rallied 5 to 7%. The 3 band ETFs that we got into were up 20 to 25%. So pretty big difference between buying the index or being a buy and hold trader and trying to outperform. It is pretty tough to do 4-5 times what the indexes are doing. And I think it's around 70% of all fund managers underperform the indexes. And I'm going to show you how we can completely annihilate that, crush that, and do even better. Now, to take things one step further, I'm going to show you the core on how to find these trades and how to manage those positions. But take a look what you can do when you apply a little bit of leverage. So when we're trading these sector ETFs, we're looking for fixed targets of 7, 15, and 20%. And then the balance of the position will just continue to run until the trend changes or until a trailing stop gets hit. Now, I don't know if you remember TAN, which is the solar ETF last year. It rallied about over 200% in the year. Now, by using our strategy, we can find and identify key turning points in the market where big money's moving in, something that sector becomes favorable, and in a 30-day window, we generated more than a 200% return. And each one of these here is one of our targets. So when TAN moved up 7%, buying a simple call option at the money 4 months out, very conservative for options trading, that position moved 39%. When it hit the 15% target, the ETF, the option moved 94%. And then 128, and then 202 at the time that I actually made this slide, and it did keep on going. So more or less, you can see how once you learn to identify these opportunities in the market, you can apply leveraged ETFs, you can move to options. So there's a lot of ways to jack it up, and there's a lot of ways to trade options that can allow you to really turn the leverage up. This is a very conservative option strategy. Call options 4 months out at the money. It's a great way to attack the market. Now, everything I'm going to teach in this webinar, it's going to be pretty quick. So I am going to be giving you the band trading strategy and the checklist. It's a mini course with video guides, everything you need, $97 value. You can follow this at the end. We'll give you the download link, Sherry, and I will share that with you, and you can go from there. So a little bit about me in case you don't know who I am. I'm Chris Vermeulen, born in Canada, just north of Toronto, and I live on the Great Lakes. And I started paper trading back in 1997 when I was in high school. Fell in love with a stock market trading challenge in our finance class, and realized, wow, you could turn a $100,000 portfolio into like $280,000 in a semester. And that was it for me. I was like, wow, this is like the ultimate video game. You don't have to deal with people. You can sit at a computer and you can make a ton of money. And it was a pretty slow, easy thing. You check on the stocks every day. It's fairly addicting, as we all know. And so that's what I've been doing since then. And really, I got through college trading. I paid for my last year of tuition and residence and all that stuff with my profits. And that's also when I started teaching my roommates and friends at college how to trade. And I was still learning, obviously, at that time, but I mean, we're always learning as traders. But I've been trading and teaching to trade for over 24 years already, which is pretty crazy. It's more than half my life I've been just dedicated to the stock market. I live and breathe it. I absolutely love it. And that's why I'm here today to share with you guys so you guys can take advantage of these slow moving sectors, which they don't move that slow. We're pulling, 7, 15, 20+% gains out of these sectors. And I want to share that with everyone because, when I was a teenager, I had to live through a bankruptcy with my parents. And I'll tell you, that is a devastating situation for everyone involved. It's embarrassing. It's obviously you lose everything. And it's just not something I'd like anyone to go through. So the whole point of this webinar is to show you how you can conservatively pull money out of this market. And depending on your risk level, you can start to jack it up to whatever meets your level there. So anyways, I've got a family, my wife, Kristen, Ben, Mirabelle, and little Leo. This is our backyard. We live on the water, and we love to hike and ski and surf, and my daughter rides a horse, competes. So we've got a pretty good lifestyle going, and trading has made all of it possible. I'm also the author of Technical Trading Mastery, and I'm a regular speaker on several financial stations and blogs. But the whole point of why we're here is for you to learn a winning trading strategy, something you can add to your toolbox. And this strategy is based on relative strength. And I call it the band strategy because we're looking for the best asset now. It's also known as a momentum trading strategy, but the cycles we're focusing on are a little bit bigger. They're generally around 39, 40 days in length. So these trades are nice, big, slow kind of waves in the stock market that we're trying to catch. Now, don't get the relative strength confused with the RSI indicator that a lot of you probably use on your charts, because the relative strength indicator on charts, all it's doing is comparing that chart's price with its own price historically. It's actually not telling you if it's got our strong relative strength compared to anything else. We want to know the strongest sectors at any given time compared to all the other sectors out there. And that's where we really kind of separate from the rest here. So the whole point here is I'm going to give you rule-based strategy. It's going to reduce your stress and free up time, as you're going to see that. And of course, that creates account stability, consistent trades, reduced drawdowns because you're not going to be holding losers, you're going to be moving on, and things like that. And trading systems and strategies are used by all the successful traders and institutions out there. 70% of volume traded on the US stock market every day is generated from trading systems. And that really is either you're manually trading them, but following a strategy, or it's automated and the computer's doing it for you. Either way, trading strategies kick into gear and they produce most of the volume, because human error, as we all know, it's super easy to put in the wrong trade, sell the wrong amount of shares, and all those things. Human error is huge in trading. So there's this company called Cambria Investments that they manage over $1 billion in assets. They did a research report that says relative strength outperforms the buy and hold strategy 70% of the time. And that's pretty amazing. If you just constantly roll your assets, your money, into the leading sectors with the strongest relative strength, you're going to beat the buy and hold 70% of the time. Now, that's a good foundation for us to build on, and that's what I have done. Now, imagine if we improve on it with a little bit of market timing, and then we pickle in a little bit of position management, we can really take this thing to a whole new level. So this other company, AQR, they're another big financial firm. They did a research report that goes back to 1927, and they say leading stocks outperform 12 months after they lose leadership. So what does that mean? That means if you were to get into the leading stocks that have been performing the best, 12 months from now, if they fall out of favor, they're still going to be holding up really well compared to the stock market average, which is the middle line here. So 12 months later, you got this huge buffer that you're still outperforming the stock market itself. So you don't need to be perfect. Now, on the contrary, what a lot of people do, and what I used to do, and it would drive me absolutely nuts, is you see all these leading sectors break out and rally without you, and you're like, I'm not going to chase price, and it could reverse at any point. I'm going to go buy the ones that didn't break out, that are ready to break out or look ready. Well, if you buy the underperforming ones that haven't broken out yet, 12 months later, they're underperforming, and you end up holding these terrible trades where if you would have just got in and paid a few percent more to get in on the leaders, you would have been rocking. So that is another huge edge, knowing you just get into the leaders and trends are more likely to continue. Leaders are more likely to continue to be leaders than they are to reverse and go the opposite way. So that's kind of the basis of what we're talking about here, because you really need to know a lot about the strategy that you're going to trade in order to be comfortable with it. So we're going to be focusing on, in the US, there's 165 US sectors. This is just me scrolling through a bar chart. But if we were to take, for example, the energy sector, just pretend this box here, this chart was the entire energy sector, and then we stripped out every subsector in there, but left the best performing sector and the worst performing energy sector. Now, in 2020, we saw the OIH ETF lose about 37% in value. We saw the clean energy sector rise 162. Now that is almost 200% points difference between the best and the worst. And I'm telling you, it's a lot easier to get in when there's a new buy signal in the market. It is a lot easier to own something that makes a series of higher lows and a series of higher highs, never really breaches any previous low, and you can stay in and ride those, versus something that might do well for a little bit, has some type of pop, starts to break down, then makes a series of lower highs and lower lows, which is a downtrend, which means you have to exit, you take potentially a loss, goes back to a small uptrend and a back downtrend and an uptrend. I mean, it's tough stuff. So we are going to be focusing on these kind of hockey stick kind of curve equities going forward. And the whole point here is to teach you how to do this on your own, because the good old analogy, teach a man to fish and you fed him for a day, teach a man to fish and you fed him for a lifetime. Huge difference. First one is give a man a fish, obviously, sorry. But that is the game plan here. So if we were to look at this strategy, I'm going to show you now, this is a basic band strategy, nothing fancy in here, no leverage. The band strategy has generated about 548% as of when I made this chart. SP 500 was up about 165%. Now, the whole point here is during a bear market in equities, the band strategy can still do very well. Sometimes the strategy may fall out of favor for a little bit, and it's like that with any trading strategy that you do. There's always going to be times when the market is favorable for your strategy, other times where it treads water for a while and builds a plateau, and then eventually it'll take off, it'll build a plateau, take off, plateau, and that is normal. But you do need to be aware that there is no strategy that's always going to be favorable. The key is maintaining your value while something or the market is not having big enough trends and not favorable for a strategy, that you just have to put in the time, let the market work its bugs out, and then eventually you're going to hit another phase where the market becomes very favorable for a particular strategy. And so I'm spending a lot of time trying to explain this because the whole point of being a successful trader is to understand why you're doing something, because if you don't understand it, you're not going to follow the rules. You're going to start breaking them. And if you can't follow rules trading, if you can't get out when you're supposed to take partial profits, no matter how excited you are about it, if you can't get out of a loser that keeps dropping, you are doomed. And that's why most people lose. Emotions get the best of us and really do a lot of damage here. So that's what we're going to be focusing on. All right. So let's jump right into it. Grab a piece of paper and pen, make some notes. I'm going to teach you how to do this band trading strategy. It is much simpler than you think, just takes a little bit of time, and we can all take advantage of sector rotation together. So knowing when to own ETFs. Now this is step number one. The key thing here is I like to look at the SP 500 daily chart. I like to throw a 50-day moving average on it. And more or less, when the price is above the 50-day moving average, and when the 50-day moving average is sloping up, this whole time here is where the stock market is favorable to be in stocks. You want to own them. When things change, when price closes below the 50-day and or the 50-day sloping down, or your trailing stop gets triggered, you would exit and then you really just sit on your hands. If you're a day trader, you can play this stuff amazing, but as a position trader, you sit on your hands and you just let the market fall to pieces, and you'll get back in eventually when it stabilizes and then gives a new sloping moving average, prices above it, and then you have another trending phase here to get back into the markets. Now there is going to be a time sometimes where the market chops around and it can affect how we trade, and I'll touch on that in a little bit. But this is the step number one, knowing when to own ETFs and when not to own ETFs. Step number two, you can go to barchart.com. If you go to the menu ETFs, it'll create a drop down. You go to the percent box and it'll bring you to a list of all the ETFs. Now there's two fields on here. You're going to want to make sure this one over here, you select performance. It's not going to be on performance when you arrive to this page. You got to click the drop down. And then this other one, we are going to go through all the different time frames. There's 5-day, there's 1 month, 3 months, 6 month, and 52-week. And then uncheck any of the leverage stuff. We don't want any of that. We just want the single times leverage. Now, what we're going to do is sort them. What I do is I just copy and paste this table into Excel, and then I'll flip this to say the 3-month time frame, and I'll copy and paste like the top 10 or 15, and I'll do that again for the 6-month and the 52-week, and you're going to end up with them all in Excel. And then you can sort by which ones showed up the most in those searches. So telling us that they're performing really well long term, they're still performing really well midterm, and they're performing exceptionally well in the last month and 5 trading days. Those are the top performing stocks. And so that would bring us to, this would be like our top list. Okay, these are all the ones that show up the most, and in the order of the most popular to the least popular. And what we want to do now is make sure we sort and grab the best 3 sector ETFs. And we have to use a little common sense here because we never want to own, put too many eggs in one basket. We want to make sure we have different sectors each time. And so when we take a look here, TAN, our number one pick for this particular time frame would be TAN. And so that would be our number one pick. There's no challenging that. That's the best of the best. The next one we look at, QCLM, well, we're gonna have to read between the lines here. This one says it's clean energy. Well, to me, solar is clean energy. So we really want to scratch anything off that is clean energy. We got clean energy, clean energy, clean energy, clean power, some other environmental thing, and another type of energy. We only want one thing in a type of sector like energy. And then we're gonna look down the list and look at another possible one. And ARC-K was one I think that popped up. And when I pulled up the chart, if you click on the symbols here, it's gonna pop up a bar chart and you're gonna look at those two charts real quick. You'll be like, they actually look really similar and they have the same pops and the same drops on the chart. And so you can look at the top 10 holdings that shows up on each of those pages, and you're probably gonna notice some of the top 10 holdings might be the same. And if the charts look almost identical or very similar, have some of the same holdings, just pass on it. So we're gonna scratch out ARC-K. And then we work our way down the list, we see ARC-W, which is internet. Well, that's obviously not solar, not energy, so that'll be our second pick. And then the last one would be HAIL, which is the electrical vehicle market. Again, a totally different sector as well. So that gives us those three sectors going forward. Now, if you notice some of these moves, they have moved 172%. The worst one, HAIL, was still up 69%. And this is where that rule comes in where, yes, they've already had those big moves. And you're probably like, I don't want to pay a premium and buy it. But the reality is when you get into these, they just keep on going. This 69 could turn into 172. The 172 could turn into 230 plus, which it did. So don't think that just because it's made 100%, the run is over. These things can go hundreds of percents with these trends that are at play with sector rotation. So that brings us back to this initial chart. So these are those three ETFs. So that's a TAN, our ARC-KW, which is internet, and then we've got HAIL, the EV market. And that's how things perform. Now, if you notice, there was a time here where the SP 500 traded down and sideways for a week or so. So did the NASDAQ. But where did the money go? The money was flowing into the leading sectors. They rocketed to new all-time highs while the stock market traded sideways. So there's always going to be a bit of a disconnect, and you can sometimes pick up the slack. Being in the leaders, even if the stock market doesn't go anywhere, the leaders can naturally float higher because that's where people are dumping their money. And relative strength strategy is one of the #1 institutional strategies out there. And so institutions are always getting more money and they're constantly dumping it into the market, and they're typically going for the leaders. So they are naturally going to be lifting the tides here for these sector rotation plays. Again, this is, we want to have this mechanical strategy in place because it's repeatable. We're only trading 3 sectors, but they're all diversified, which is awesome because sometimes some sectors just don't pan out and other ones go to the moon. You just never know. You want to be diversified. So the next really big step here is about risk management and your positions. If you don't do this, you're never going to make it as a trader. In fact, this is one of the most boring parts. One of the areas that almost everyone kind of ignores and turns a blind eye to is how big of a position size should I put in? And nobody wants to learn about position sizing and risk management because it's like the most dry content ever, but it really is one of the most important things that you could do. And the band strategy, I'm going to show you here how we manage positions. It makes it very simple. But the general rule here for managing risk is position sizing is how you manage your overall risk. Most people trade a position size that is 2 to 3 times or more larger than they should. If they were to take a loss on where they are expecting to take a loss, they're actually not mentally prepared to take that dollar value of a hit. And that's why they can't sell it when they actually get to that stop, because they didn't think it through. They haven't run the numbers and really thought about how painful it would be if they were to lose on that massive position they took on that high flyer. On the flip side, if you trade a tiny little position because you are scared as heck to trade this market, even if you hit a grand slam, it's just such a tiny little profit you make because you don't have much money at risk. So it's about finding that fine line. The next is about taking partial profits because that's how we create consistent returns. If you just buy it and then you sell it all when you feel like it, you're never really going to have that opportunity to outperform the market to get those extended gains. And that's why we scale out on these sectors of 7, 15, 20%. We let the last portion continue to run for as long as it wants to go. It can be months in some cases. And eventually the trend of the stock market changes, which forces us to close all open positions, or the price of the play that we're in reverses, and eventually it hits our trailing stop and it knocks us out and we lock in gains later on down the road. So that's how we do that. The other thing we need to do is we need to exit positions because that's going to help us limit losses and lock in gains. If we don't take a loss, if we don't sell, you're going to end up with a really bad loss later when you do finally bite the bullet and exit a position. And you need to lock in gains. By selling it, you're pocketing profits because, as we all know, it's super easy to make a lot of money or see your account up big in a trade, but by the time you actually sell it, you probably didn't make nearly as much as you saw at that point, and you potentially could have lost money. And people think that just because they're stock up, that they've made a bunch of money. You don't make it until you lock in the gains and hit that sell button. And that's really important. You got to be pulling money off the table. I can't stress that enough. And so this is how we would go about taking advantage of this. So this would be like a sample trade alert that you'd write up on your own on your computer or on a piece of paper. We're going to eventually have 3 of these because we're going to have the top 3 sectors we're going to get into when the stock market gives us a new buy signal. For example, closes above the 50-day, 50 days sloping up, that type of scenario. Put in your symbol. The nice thing about the strategy is it's an end of day. So everything's based on end of day when it comes for an entry point and exit point. So we got a new buy signal. We run the numbers. We find out the best 3 ETFs. And then the next day at the opening bell, we can just have a market order to put us into the trade. And because we're going to be trading 3 positions, we just divide it by 33%, which will get us to our 100% position. And then, of course, what we're going to do is scale out. We got to lock in profits at certain percentage points. So when we hit 7% gain, you can put in your share price here. You're going to sell 25% of the position. When we hit 15%, 20%, and then the last quarter of our position just stays as a runner. Let it run, let it do its thing. We could make a ton more with it. We could make a little less than the last exit. Doesn't matter, we gotta let it do its thing. And it just runs with a 15% trailing stop going forward. And of course, one of the first things you should do when you get into a trade is place that 15% trailing stop right away. It's the first thing you should do, and then figure out your profit targets going forward. So this gives you a visual of how this looks. So these lines up here are profit targets. And then we've got our trailing stops that'll just, as price moves up, the trailing stop with your broker should naturally just move up with it. And then we got the 50-day. So you get a new buy signal over here, you get into the top 3 sectors, it moves up. And then eventually trailing stop gets triggered, trend actually changes. We sit in cash waiting for a new position, and then boom, rinse and repeat, play the top sectors as it moves up, and let the market do its thing. So it's pretty straightforward strategy. And if we were to take a look at what those particular trades look like, you can see TAN was in on September 30th, entry price, position amount, and then we've got our 7%, 15%, 20% target. This one here, the price actually gapped up above it, so we actually got a better fill at the open at 22%. And then by the time the trend and the markets reversed and sold off, the balance 25%, we made 7%. So you're not always going to make more on that last bit, but you should generally make some because there's a trailing stop. So you're going to be locking in some gains. Sometimes they're just not as big as the rest, but sometimes they're huge, and you have to keep that runner as your kind of Hail Mary play. Obviously, this other one here, we saw the market ran up, hit our first target, and then the rest got out at 4%. And then this last one here was 7, 15, and then 4%. And what's interesting here is all these profits that were locked in, This trade, September 30th, was actually right here where the stock market gave a new signal and it came up. The stock market was actually down on that time frame and was actually negative. Meanwhile, we locked in 3 profitable trades, some of them, one of them there with a lot of gains, using the band strategy. So as the market was trading in this big sideways range, we were able to pull money out. And that's the joys of being in the market leaders. Sometimes they just naturally want to run up and hit some targets and allow us to lock in gains. So that's kind of what's really exciting about this strategy. Is it's slow, it's simple to follow, and you really, I mean, it becomes pretty straightforward. You're going to realize there's a lot of times you're sitting on your hands, and the nice thing about this strategy is you probably have other strategies. So this one is really slow and simple. You can still do all your other trading around it, no problem, and you'll actually be able to know when you're more favorable to be in some of your other strategies based on knowing when to be in stocks, when to be out of stocks. So when we take a look at, say, for example, this is a year, on average, the market's going to give us potentially 5 new triggers a year. We got 1 trigger, 2, 3, 4. So we're going to have anywhere 3 to 5 triggers. We're going to be putting on 3 ETF trades, 3 sector trades. So you've got potentially 15 trades positions on a year. When you're in the market, it feels like you're managing your own little mini hedge fund. It's an absolute blast. When you're avoiding chaos, it feels even better. And then you can continue to trade that. Now, I'm going to show you how we do this 4th special ETF trade, which I call like the Band Pro signal. It really benefits from a certain market condition that happens usually once or twice a year, where this one trade can make up for a lot of the annual returns and really jack up the boost. But to give you an idea here of how often we're in trades, put it this way, 66% of the time we're in positions. So 34% of the time we're in cash. 4 months of the year, we are not doing anything. We're letting the market shake itself out. It's not favorable. And so it just goes to show how passive and how straightforward this is. And the whole point of the strategy is something that's slow, easy to follow, and really it's a boring strategy, but to me, it equals freedom. It's not about being glued to the screen, day trading and making a job out of it and all the stuff that comes with it. I've been there, I've done that. It's all about catching nice big tides with large amounts of money and avoiding it and going doing other things when you want. For example, a couple years ago, I invented the V-foil, which is the world's first flying jet surfboard. This is my backyard. This is my buddy chasing me down on the Sea-Doo. I'm flying above the water with a remote control in my hand, and it's a dream toy. It's like your Silver Surfer out there. I built it in my garage. I got it patented. I've now licensed it off to a company who's just about to take it into production. And this is the type of stuff you can do if you're not glued to the computer screen to try and work for your money. You can really let the market work for you with this strategy and go do other really cool things. I just recently starting this other company called Early Start, and we're helping young kids, youths, become entrepreneurs, how to build their own micro websites online and be making more money than their teachers or parents by the time they graduate school. So we're launching this in about a month or so. Really exciting. It's amazing to give back. And of course, I went through difficult time as in high school with bankruptcy, and then I became very successful and have been there since early 20s. And now I want to give back and help other kids learn how to take advantage of the markets, learn how to take advantage of being an entrepreneur, and really they can do anything they want online, which is why it's called Early Start, because we're teaching them how to build an online business and get that early start on life. So let's talk about quickly what is going to happen right now. We all know money in the bank pretty much makes nothing. Bonds are all over the place, but really they don't net a whole lot. You've got the stock market, you've got to hold through some pretty drastic drawdowns, potential losses. On average, you're making 7%. And then we've got the band trader here, which we're averaging almost 13% a year. And then the Band Trader Pro, we're averaging around 19% a year going forward. And the Band Trader Pro, let me just show you a little bit about that. So what the Band Trader Pro does, it's giving us that 4th ETF trade, and it's using an index fund, and we trade it a little bit differently. And every year there's there's a certain period in the stock market where sectors actually don't really move much, yet the stock index keeps on going higher. And this particular trade allows us to take advantage of those market conditions. And this fourth ETF trade that we put on ends up picking up most of the slack. In 2020, this fourth ETF, it rallied about 45% on its own, picked up a lot of slack when sectors really didn't do a whole lot at one point. So there's a lot of potential with this fourth ETF trade. And that's one of the plays that you're going to want to do here. Now, for example, to give you an idea of what the Band Pro versus the SP 500 does, a $10,000 investment going back to 2008 would net you 18,600 in the SP 500. The Band Pro would be 97,400. So a lot of money can be made. And remember, there's no leverage here, guys. This is just trading sectors. If you trade leverage ETFs, the numbers on here are almost unbelievable. You trade options, it's ridiculous. I don't even want to put the numbers on here. But if you do a blend of them and find what fits with your personality or risk tolerance, I mean, I'm showing you a rock solid base foundation to outperform the market, and then you can ramp up the leverage on your own. So this is what the Band Pro strategy looks like. It ramps up, it's up around 1,000%, almost SP 500 up 186%, just dramatic difference in returns by taking advantage of the stock index in a really unique way. And this strategy works really with any account size. This works with people, we've got users with millions of dollars, tens of millions of dollars trading these strategies. We've got people with very small accounts. Even if you have a small account, to learn it until you at least grow a bigger account is crucial, because it's all about having a strategy that's simple. End of day, you can still work a job, you can still trade your other stuff. This thing is just kind of in the background, probably picking up the slack from your other trades that are going on. So that's kind of the whole strategy here that I wanted to share with you guys. Let's just skip over here and get to the end, and we can go over some questions if we have some. But the band trading strategy, it's regular $14.99, and I'm going to be giving you guys the Band Trader Pro signal, which is that fourth ETF trade. That alone is its own strategy. And with these two, you're going to get a pre-market video where every morning before the opening bell, I talk about exactly what the markets are doing, why they're doing it, where these short-term pivots are. In fact, we had some really cool spike trades this week that are for day traders. I share a bunch of day trading insight for early morning quick cash, but it's not really part of the band trading strategy. But I like to cover the markets because I know a lot of members are very active, and they pocket a lot of money off just the morning intraday analysis of what the markets are going to do with morning gaps and panic selling and things like that. On top of that, I'm going to throw in the hot list. I'll cover that in a second. I'm going to give you a recording of the course to trade this hot list. So if you're an active trader and you want a whole bunch more trades, that's what this is going to give you. And then every month, we go over a mentoring class, and we can go over everything. And of course, you're backed by the 100% guarantee. Now, one of the subscribers, he subscribed in December. He says, all 7 trades I exited in profit. We'll just quickly skip through here because we are running out of time, but he totaled $5,471, annualized 220% return. He's made 2,189% return on his initial investment, which is the subscription at $14.99. And he's good for a long time, 5+ years worth of subscriptions in 1 month. So that's what we're looking to do here. So you're going to get the Band Pro signal. We're going to give you this hot list. This hot list is going to tell you, it's going to give new triggers. When the market's favorable, we're going to have new triggers popping up. They're going to look like this. We get a new trigger in the market, and then you're going to see a band hot play that's going to have a very quick move. This one ended up just running the whole way, but each time there was a fresh new trigger, it surged. If you happen to get into the first one, you would have rode this thing up for the whole way for roughly 100% gain going forward. So pretty exciting stuff. Again, you're going to get a short 20-minute course on exactly how to trade the hot list, so you get lots more trades. You understand how to manage the positions, which are managed the same as the band trades I just showed you. And And then we're going to do the mentoring sessions. And I'm talking to you right here, right now. This is another trading terminal for me to teach other traders pre-COVID. And yeah, no more time consuming research. You get my daily video, super insightful, very educational. You're going to know what's going on, the pulse on the markets. You won't be panicking when everyone else is. You'll be excited when everyone else is panicking. And of course, I can give you the trades for you to follow as well. And on top of it, for being here at Traders Exclusive, I am going to give you guys our TTI, which is our Technical Investor newsletter. This is big, slow, passive, set it and forget it investing style. You know when to be long the stock market. When it changes, you call your advisor or you go to your RIA or your retirement account. You say, hey, I'm moving out of index funds. I'm moving strictly into either bonds or cash. We actually have a strategy to navigate this, because sometimes bonds aren't actually a good play. Cash is better. And we're just going to help you navigate these markets. So actually, Sherry, if you're able to paste in there the free bonus for staying to the end, the checklist there, that would be great. And let me just see, I might be able to paste it in here. Oh, you got it, okay. Perfect, guys, so it's in the chat room. That was a lot of info. I really crammed it in. Hopefully you guys aren't asleep, or I went too monotone and just kept on going, but
No, it was great, man. I also put the link for the Band Pro offer plus the TTI. So they're all in the chat there. I do have a
excellent.
question for you though, if you're ready to take one.
Yeah, fire away.
So Douglas wants to know, if we subscribe to your band service, do you quote unquote give us the actual trades? Which I think I just heard you say you would give them the trades.
Yep. As
For
soon as there's a
example,
new,
buy GDX at 35, or do you try to teach us how to find our own trades using your system?
so I kind of just showed everyone how to go and find it. The band trading strategy, I've applied a little bit more to it. There's a little more details. We give you the exact trades. Like, so when we get a new buy signal, we will send you an email that night saying, we have a new trigger. Here are the there'll be 4 ETFs that we're trading. The symbols, buy at the open tomorrow morning. Here are the targets. Here's our stop. And so you get everything for you. You don't really have to do anything. And you can watch the videos every morning and read the afternoon update we post, or you can be totally passive and just wait for a trade signal and ignore the rest. You do not need to be active to trade this. This is a passive, boring trading strategy, which boring means it's profitable. Boring means you know what you're doing. You're not on that roller coaster. So embrace the boring and not much action. So
Yeah, boring is good. Contentment is good.
yeah.
All right,
Start
anybody
off
have
with
any other questions? I think we have like time for a couple more, since I did burn up a couple extra minutes at the start there with my unfortunate muting of myself. Anyone have a question? Or we're gonna have to let Chris go.
All right.
I know
Well,
you got a ton of other things to do today. So if they need to get in touch with you, how do they do that?
if you want to get in touch with me, you can go to our website and use the contact form there, or send us an email to support@thetechnicaltraders.com, and we will get back to you and go from there. But I appreciate it,
Perfect.
Sherry. Really.
There, I just put that in the chat too.
Perfect.
Thank you so much for being with us, and I will definitely be following up with you about the early start
All right.
program.
Yes, sounds great. All right, guys. Thank you for listening.
All right. Have a great day. Thank you.
Take care, guys.
It sounded great.
Bye-bye. Thanks.
All right. Bye-bye now. All right, guys, how great was that? Let's just see something here. I'm going to. All right, you should be able to see my screen. Next up, I just wanted to remind you that if you have to leave early, we do post these at tradersexclusive.com/archived_webinars. You just go to tradersexclusive.com and you'll see, you go to the trading education webinars. And when you get there, you can see this little, where I have my green arrow, it's not on that page, but you click here, you can see the list of upcoming webinars. And you click here to get to the archive webinars, and from there you'll be able to see all of the webinars we've had up. And also, our next speaker is waiting to bring to you simple concepts to increase your odds day trading. It's Paul Lange of Disciplined Trading Strategies LLC, and let me just move something out of the way. Yeah, Paul started Disciplined Trading Strategies in August of 2017. Disciplined Trading Strategies is a site for traders and investors. He runs a very popular day trading room and also publishes The Long-Term Trader. It's a portfolio for hands-off long-term investors. He also provides a ton of free information on the DTS free stuff page. And he gives assistance to new people on his website. He has the best seminar program for those interested. Paul's a very experienced trader, investor with 20 plus years in the trenches every day. And he spent many years at Pristine Trading as the senior instructor and trading room moderator before opening Disciplined Trading Strategies. The concept is not to run a business, but just have fun providing a serious place for traders, both new and experienced. And so there's a little disclaimer at the bottom of our little speaker's blurb today, and it says, while Paul is active as a long-term investor, today's discussion is going to only apply to day trading. So, Paul, are you there? Let me just make you the presenter. I think I made you presenter, yes. Can you hear me, Paul? Are you there, Paul? Not hearing you.
Here I am. I'm here.
There you go. There you go. Did I
Hi,
get it
Sherry.
all
Hi,
right?
everyone.
How
Now
are
the
you
tricky part.
today?
Let me bring up the slides. Do we have some slides?
I see. Increase your odds day trading.
That sounds about right.
Yeah. All right. Well, I'm going to
Hi,
mute
everybody.
myself, and
Welcome
I'll be
to
back in a
today.
little bit.
First of all, I want to say, I just kind of log in time to get ready for me. And I just want to say, when I logged in, I want to get one of those hover jet skis. That's all I have to say. That looked pretty neat. That's when I logged in from the past presenter who sounded just great. All right, what I want to do, folks, is I typically do things just a little bit differently. I'm going to go to the first slide here, which is just a little blurb about me. I'm not going to even talk about me. Sherry introduced me, but I always figure that you don't want to hear about me. You want to hear what I have to say. And if you like what I have to say, then maybe at the end I can tell you a little more. And if you don't like what I have to say, you'll probably tune out and be gone. So I'm just going to pass over that. And also treat these a little bit differently. I don't do a lot of these events at all. In fact, I've just been doing with Sherry every 4 months or whatever. So I don't do these a lot. I always have mixed emotions about them a little bit. But I am not going to have any kind of sale, offer, special. There's nothing going to happen at the end other than I'll see if you have any questions. And I'm going to give you a link to actually, Sherry can give it now if you don't mind. I'm going to give you a link to a page on my site called the Free Stuff page. And it is what I at least claim to be the greatest source of information for traders and investors anywhere on the web, at least useful information. You can certainly find some sites that give kind of useless information, definitions and things, but this is a very useful site. So if nothing else, if you want to log out right now, go check out the Free Stuff page. There's no kicks or gimmicks. You can just go there and check it out. You could spend an entire week right now looking at all the information, articles, and videos on various topics, okay? Oh, I gave it to you, Sherry. Here, I got it right here, though, when I first logged in, but here's the...
Sorry about that. I must have missed it.
There you go. There's the link to the Free Stuff page. So I want you guys to have that. And that's, at the end, that's all I'm going to do is refer you back to the Free Stuff page. And also, here's my email if you want to get a hold of me or if you have any questions about what I'm going to talk about. What I am going to do is share with you some useful information today. I have been teaching people for a long time, and I take a lot of pride in teaching people. And one of the things that, you know, I believe in is that when I first started a long time ago, I wanted to figure out for myself, and I respect that. And people who want to do that, I even help them. And if you come to my site, there's more information there than you will find anywhere. And I also find it's useful because if somewhere down the road somebody does decide that they want my help, they want to take a seminar program or become a part of the room or the letter, whatever, I find that people who have exhausted themselves trying are much better students. In other words, people who think they can do it are not willing to learn. And people, once they try and have a hard time, they have an open mind to learn. So I really encourage you to try and go and take a look there and see everything that you can. Let me get right to the topic here today then. So I'm going to try and share with you one great piece of information, something that you can use tomorrow. And again, as Sherry pointed out, and thanks for doing that, even though I love very active long-term investing, and then the other extreme, I like day trading. And this is about day trading today. Even though all trading concepts apply to long-term or short-term, because this is specifically about timing the intraday pattern, it kind of really, there are timing mechanisms also for long-term, but this really applies just to day trading today. So if you have zero interest in day trading, you might want to stick around and be fascinated by it. But if you do day trade, you can use this tomorrow as a tool. Keep in mind that I'm not here to tell you that you're going to learn how to trade if you don't know how to trade from one simple trick or gimmick. It's a process you have to learn like anything else. And it is a very useful tool I'm going to show you here today, but it's not something you're just going to be able to say blindly, here's how you make money. And I think you all know that if you're here listening to me. One of the things I believe is that there's right and wrong to learning how to trade the market. There's some things that are just completely wrong. And one of the things I believe in teaching people is that you have to eliminate what's wrong or you'll never accept what's right. But that being said, there are different ways you can do things right. And it's kind of pertinent to the topic today. Things that are wrong, they may work once in a while, but that only adds to the confusion. When you're day trading, when do you have the highest odds? Well, what is wrong, and unfortunately that's what most day traders do, especially when new, is to sit there all day trade trading, 6.5 hours, then turn off the computer at 4 o'clock and then fire it up the next day and hope that something goes better. That's the absolute worst way to do it. You do not sit there all day. You do not keep your focus. And very simply, it's like an analogy to a professional blackjack player who sits at the table continuously betting the entire time. You have to strike when the odds are the best. Now, when are the odds the best? Well, this is where there's not an absolute answer. You do have to strike when you have the highest odds, but that can vary per person. In other words, this is one of these cases where any time of the day can be okay once you learn it really well. So I'm going to focus on what I like personally, right? Really understanding technical analysis gives you the ability to find many different high odds setups that can occur anytime. So the following is what I personally like to do, but it's not wrong to like a different time period of the day. I personally like the opening 90 minutes, and I'm going to take this next 20 minutes explaining to you why. I'm going to finish early and give you plenty of time for questions. And if we're just done, we'll just be done. But I'm not going to fill up your time tremendously here. I just want to get my point across. So I like the opening 90 minutes. And again, it's not wrong to like a different period of time, but I want to show you why I like the 90 minutes. And if you're not aware of this and you do day trade, this will probably just blow you away. It's not a trick or a gimmick. It's just something that's there every single day. The opening 90 minutes incorporates the first 3 reversal times. Now, reversal times are one of those things that amaze me because I'm shocked how few people know or understand them compared to how incredibly useful they really are. And this stat here, I'm giving you 90%. That's not a real stat. Like I didn't run a systematic test for months about this. I'm just telling you, sitting there every day in the trenches forever, that this is approximately true. 90% of the time, stocks, I'm talking about stocks in this case, hit their high or low of the day, or at least for the first half of the day, at either 9:35, 10 o'clock, or 10:30. Now keep in mind, when I say those times, I don't mean to the second, and I don't mean that you go long at 10 o'clock regardless of the pattern. I'm just saying if you have a strategic concept and you're looking for an entry, that you're going to greatly enhance your odds if you focus on the fact that almost all the time, a stock will set its high or low for the day at either 9:35, 10, or 10:30. And that doesn't have to be a total guess either, because when you know the patterns, you can usually narrow it down to 1 or maybe 2 of those times very, very frequently. My concept day trading is very simple. if you short the high of the day, you can't lose money. If you buy the low of the day, you can't lose money. Sounds simple. But Paul, wait a minute. I read in many of those important trading books that you're not supposed to find the high or the low. Isn't that correct? I know I can't really see you guys type right now, but that's absolutely wrong. That's insanity. Of course, that's how you make money. You short the high of the day, you buy the low of the day. It's insanity to say that's not what you do. It is what you do. There's a concept out there which is correct, that across multiple time frames, that it is kind of the hallmark of the losing trader to try and find the absolute low of something that's falling on intraday charts, daily charts, weekly charts. That's correct, because that's a tough job to do and you don't need to do it. But finding the high or the low for the day does not involve finding the high or the low of the pattern. Very frequently, the high of a pattern could be a lower high somewhere else, and it just happens to be forming the high that day, and that's what I look for. So I'm looking for bigger term patterns on hourly charts where there's a specific setup, and I know that as we run into a certain area, that's going to be the high for the pattern, and that will also time out to be the high for the day. When you short the high of the day, if you get that, and of course you can't always get it, but that's your goal, you can't lose any money. All you can do is if it just kind of goes nowhere, you make a little or break even, or if it drops, you make some money. And if you get it right and you have a big move, you can make a lot of money. So that's the goal that I have. So how do you accomplish this? Well, I want to show you now. I have to pause for a minute and say, I had a little mix up apparently with my schedule here. I thought I was on 2 weeks ago today. So I prepared this for you guys, and then I ended up coming on today. Now, typically, I only show trades from the last couple of days. I don't think it's very useful or very forthright to take trades from long ago and bring them up and show them. So I'm trading every day, and I always show trades that make my point from the last couple of days. This is all prepared 2 weeks ago. I just used it as it was. It's some great examples of what I'm showing. I threw one thing in there from today just to show you that, again, the concept worked today. So yesterday was actually 2 weeks ago. But these are the 3 trades I did that day. And this was RIG, RIG short, Newmont, NEM short, and UAL airline short. And notice the times. These are at 9:30, 9:35, and 9:55. So those first 2 are incorporating that first reversal time of the day, 9:35. And the second one is incorporating the second time of the day at 9:55. Now, an interesting thing, there are other reversal times throughout the day, but these are the key ones to me. I have no idea why 10 o'clock or 10:30 works. And I've been at this forever. I've personally trained 2 market makers. They don't know why. I talk to them frequently. Nobody knows why. It has nothing to do with economic calendar, because this happens with or without economy being released at that time, economic numbers being released. It just doesn't matter. The one I do understand is 9:35. There's a reason why 9:35 works. And that's because market makers, specialists received what's called buy or sell at open orders. So if a market maker has, let's say, 15 buy it open for a stock and 15 sell it open for a stock, he could be a nice guy and just kind of go back and forth, buy one, sell one, buy one, sell one. Or what he could do is take all 15 and sell. And then now that it's at the bottom, maybe buy a few shares himself and then take the 15 buy orders, buy. And that's what happens a lot of times in 9:35. You'll get a move that appears to be against the power of the current trend, and those are often opportunities. So that's what 9:35 is all about. So here's the 3 trades, and I wanted to show them to you and how they work down. That's the only 3 trades I did that day. Most of my trades end up lining up at reversal times. I'm very big at looking at the opening 5 minutes. Many people you will hear tell you or train you or read in books, oh, don't trade the open, it's very risky and shaky. Well, it's because some people don't understand what happens. If you understand, it's one of the highest odds times that you can possibly have as a day trader. So the first one, RIG. The strategy, now again, these times are used to complement a strategy. You can't just blindly assume you know what's going to happen. But when you have a strategy, in other words, a strategy on RIG declared to short any weakness after it gapped up. So this gapped up into a downtrending pattern. And I call this a tier 1 entry. A tier 1 entry means that I'm going to get into it. If it drops, I'm going to chase it. If it rallies, I'm going to short the rally. I'm going to get into it no matter what. So the strategy here was to short any weakness. You can see that opening 5-minute bar. I think you can see my arrow here. It popped in that opening candle there, a little topping tail, and started to fall. Entry under 372, stop 378. Rig trades, you know, it's a smaller stock, but it trades a bazillion shares a day. You can get all the shares you want. So this is a really nice entry for this. And the concept here was that this would line up with the 935 reversal time, meaning that it would set its high of the day, the opening minutes. And you can see what happened there. It ran up. There were some orders, you know, whoever had buy-in open orders ran it up a little bit, and then it just collapsed after that. So that little pop higher is your opportunity to either get in, or once you see it reverse, to confirm that there's weakness coming in. So there's a 935 trade. And then shortly after, oh, there's entry, boom. NEM was also the 935 reversal time. This wasn't taken right at the open. The strategy here declared a short any weakness after the gap down. So this one also could have been entered just as aggressively, but I was busy doing the other trade. Can't do two trades at once simultaneously. So what happened here, if you look at that little 1 minute inset, this is the big chart's a 5 minute chart. That little 1 minute inset, after it started to drop, it came back. And then I just shorted as that green bar, excuse me, started to fade away. Shorted under 62.95, stop over 63.30. High of the day was set at 9:31, just like the prior one. High of the day set the opening minute of the day. Again, I get those odds because I understand the bigger strategy going on. It says that that opening few minutes is going to be the high or low for the day. So that gives you, again, to me, fantastic odds. You have to know whether or not you want to chase a gap like that lower, because sometimes the gaps will come back and fill. So you have to know the difference or you're going to be in trouble. And then the next one waited till 10 o'clock. So UAL was another gap up that was going to be shorted, and the strategy declared to let it test the 46.60 area. So there was some resistance over here, and an opening bar tested it. It started to drop, and then I wanted to see it retest. It never quite retested. What I actually wanted to do was short the retest at 48.60, but then it went sideways and started to drop. So I ended up shorting underneath that little consolidation, 48.25, stop over 48.60. And this drop, notice, happened right at 10 o'clock reversal time. 3 in a row, boom, it happens very, 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 very frequently. I'm calling it 90%. If you did a test, I don't think you'd find much difference. You may be saying, Paul, fine, you can pull out some trades, or maybe at one day this all lined up, but is that really what's happening? Well, yes, I could always, anybody could find trades to make a point of what they're trying to prove to you. It's not what I do. For those of you that are in the room with me, and there's probably some of you here listening, this stuff happens all the time and people just aren't aware of it or how to incorporate it. So just to show you, what if we said, fine, forget individual stocks. The market is the sum of all stocks. Yes, the market does this too. Here is, at the time I did this again, and it's still true if you go back today, but here's at the time I did this, the QQQ for the 3 days prior to the day I was going to do this event, 9:35 high of the day, 10 o'clock high of the day, 10 o'clock high of the day. 3 days before that, 10 o'clock low of the day, 10 o'clock low of the day. 1 day out of the 9 I'm showing you didn't happen, noon high, 1 day. Next 3 days before that, 10 o'clock low of the day, 9:35 high of the day, 10:30 high of the day. Again, I can't see you typing, but you guys should be blown away by this. And again, it's not a fluke. It's not just picking. When I teach my seminar class, the day I come and I'm talking about this and teaching it, every time we just go back and look at that week. And this is true every week, anytime. You don't believe me, go look at your own charts. Print out some charts, print out your favorite stocks, print out the market itself, draw lines through 10 or 10:30, 9:35, and you will have drawn a line through the high or low of the day 95% of the time. So if you understand technical analysis, if you know your strategies, if you know the areas you should be looking at to be long or short, and then you complement that by looking at charts like this, it can be very, very, very helpful. This, of course, won't teach you to trade. The basic understanding is this is all meaningless if you don't know which stocks are likely to do this and at what time. The strategic concepts are amplified by timing. And again, I kind of equate this to a blackjack player. Not that I'm hung up on blackjack, I don't play blackjack, but there's a lot of analogies there. And for a blackjack player, if you don't know the basic rules, in other words, when to take a hit or not, you'll never have a chance of making money. It's just like if you don't know technical analysis, you don't have a chance of making money. But even when you know the basics of technical analysis, you're not going to make money. Just like the blackjack player who knows the rules, you're still going to lose, right? A blackjack player playing perfectly is going to lose 52% of the time. That's why the house wins. So you have to have something more as an edge for you as a blackjack player that's knowing how to count cards. As a technical analysis person, it's called superior technical understanding. And I'm going to show you a slide in a minute what else you have to know to get a real edge in the market. Because even when you're good, you don't have a huge edge. It's not like you walk out there long-term, short-term, and you just know what's going to happen. It's pulling a whole lot of things together to get every little edge behind you. And when you do that, you have a good time making money. I was busy. I threw one slide in here from today, and this is QCOM. Went long QCOM, entry 147.66. Guess what that was there? That is the 1030 low. That one bar is 1025, the next bar is 1035. All the time. Now, again, the QCOM strategy was to get that. If you look at QCOM today on a 60-minute chart, it's a beautiful setup. I wanted to pull back into that support area. It did that. 1030 was the time. Now, in all fairness, I don't like ever misrepresenting. I tried it long at 10 o'clock, got fooled. I ended up getting out and redoing it here. So that was try number 2. It already hit a target. The rest of the stop moved up. And hopefully I'll see that move higher into the day. I'm hoping that's going to make my whole day just that one trade. So there's QCOM today, same thing, reversal time. I want to save some time here. That's some basic concept that I have for you, but I want to go just do a couple other things just in general about if you're here listening to me, you're obviously interested in trading. What I teach applies to Forex, to stocks, to futures. I personally like doing stocks and futures myself. I think stocks gives you the biggest advantage because you have a variety of things that you can look at. To me, let me go back to here. To me, it's not about having to find a trade from a chart. In other words, if you give me a chart and you say, make money from this today, and you just pick any random chart, maybe it's a Forex pair or something, 97% of the time, I'm going to tell you, I probably can't make money from that. And that may shock you. But this is the truth, and this is why so many traders lose, is because they try and force trades. They find something, they think they have to trade that one thing, and they keep forcing it and losing. Your real job as a trader is to understand technical analysis, to learn certain patterns, and look for the stocks that are showing you that pattern, like QCOM today. Came across on multiple time frames as something that I wanted to do. I knew the pattern, very confident to take it. But if you were to just randomly show me another stock, show me Darden Restaurant today, DRI, I wouldn't know what to do with it. It's conflicted across multiple time frames. If you sat there and maybe make comments on it, I can make intelligent comments. Maybe I could find a working trade, but it would be much lower odds than if you let me go out and look at a variety of stocks and say, hey, that's exactly what I'm looking for. I know what that's going to do. And that's what I do every day as a day trader and also as a long-term investor. Now, if you like hearing me speak, at Disciplined Trading Strategies, I do events like this, except they're in my own group. And there's a calendar out there. If you're on the free stuff page, Sherry gave you the link there to the free stuff page. And if you're there, you can hop over and see the home page and you can go to the calendar. And a week from today, I'll be doing a special event where I take a full hour and talk to the DTS free members. To get invited, you just have to be a DTS free member. There's no credit card, there's no gimmicks. I don't sell or trade your email with anybody in the world. It's just simply you get invites to educational events. That's all it is. I don't even do any advertising. Anybody at DPS, they've never received any kind of sale information because I've never had a sale. 95% of the emails are all just about education. Occasionally, I may bring up trading room, long-term letter, seminar program coming up, but it's really 1 in 20 emails. You don't get a lot of emails. It's mostly educational events. So you don't have to be afraid to sign up. If you go to the free stuff page, I think you'll probably get a little pop-up that says sign up to be a member. So you can do that. If you become a member, you'll get invited to the event next Wednesday and the other events. Coming up, I also do a half-day technical analysis class that everyone is invited to. So if you're a member, you'll get invited to that. It's about every 6 weeks. You just missed it because it was just a couple Fridays ago, but it'll be Friday the 10th will be the next one because the one before that is the Labor Day weekend. For me, if you're still here and you want to know anything about me, I am just right now having a great time doing what I do. I'm bored most of the day. I like to day trade the opening couple hours. I have a day trading room. A lot of people in that room have been with me for, a few of them been over a decade. They've been with me for a long time. The room is not packed with people. There's like 40 members, and the reason is because a lot of people go off. I get the most common email I get is, "Hey, I'm doing great. I'm just going to go off on my own. You know, thanks." Some people like the trading room environment. Some people don't. I'm just a small person. I just have my company. I really do almost virtually zero advertising. I just tested a little bit earlier this year. And I just have fun doing this. And I, at one point, was going to kind of quasi-retire, and I had my best year I ever had, and I decided to come back and just offer this. I don't spend a tremendous amount of time doing this, but I am available for everybody. I spend the opening couple hours in the trading room. I'm only trading there the opening couple hours. I like to leave positions open, so I'm sometimes still texting or typing in the room, but basically I'm done after the first couple of hours. I have a long-term letter that people can subscribe to, and that doesn't take much time because it's long-term positions. It's doing great. If you go to the website, you can, right on the website, it has a little thing right in the center telling you how it's doing. You can click on it and see what's going on. And then every 6 weeks, I teach seminars over the weekend, and that's it. So I have a lot of fun doing this, but I also enjoy helping new people. The typical person that does something with me is typically hanging around for like a year, you know, just hanging around, learning, sticking their toe in the water, have a lot of questions. And then sometimes after a period of time, people, you know, sign up to do something, either the room or whatever it is. But you're not going to get hurried by me. As a matter of fact, I've sometimes talked people out of signing up for stuff because I just don't think they're ready yet. So you can feel free to email me if you want. I even will get together with new people, even if you're not subscribed to anything, and review some trades or talk to you if you want to do that. Here's the other thing about me. What I believe very much is that there's only one way for 99.9999% of us to make money in the market, and that's through technical analysis. There simply is no other way. I can tell you the story about why fundamentals don't work, even though you could say, what about Warren Buffett? But you're not Warren Buffett, and technical analysis just works fantastic. Why does technical analysis not work for so many people, it appears? Because you hear people say, oh, it doesn't work. Well, it's very simple. It's because they never learn it. I have people send me trades that they do based on their understanding of technical analysis, and it's just pathetic. They read a book, watch a video from somebody who doesn't know what they're doing. Their definition of support or resistance is just insane. You have to really learn technical analysis. I'm not saying it's real hard, but you have to really learn it like you would learn anything you want to learn in life. So the first secret to making money is what I call superior technical understanding. You have to have that. You can probably gain that on your own, just independently. It would take a while. But then in addition to that, I know, again, I've been teaching people forever, and I've seen a lot of people that have sufficient technical understanding to make money, and they don't. Why? Well, part of the reason is psychology, because they can't manage trades properly, because all of psychology comes into managing. And one of the favorite expressions I like is that new traders often fail because they take large losses. Experienced traders fail because they take small profits. And that small profit thing is where the psychology comes in. If you're listening to me, 9 out of 10 of you have a problem ever getting to a target. You probably are break even. You probably have a whole string of small wins and small losses. And not all of you. I mean, obviously people get past that. But there's a long phase that people go through, the break even blues, where you've learned not to take big losses, but you're so scared that you constantly take small profits. And sometimes people never get beyond that. And you have to get beyond that, or you will end up failing. You'll have a death of 1,000 paper cuts instead of one big cut. And the third thing that I don't hear taught anywhere is the concept of math and probabilities. And that gets down to a couple of sayings that I like. One of them is that I'd rather make money than be right. Trading is about making money and not about being right. There is a difference. And also, to me, it comes down to something that I call, I'd rather have a great entry on a so-so strategy than a so-so entry on a great strategy. And it may not make a whole lot of sense to you, but it really all comes down to making money rather than just pretending you know technical analysis. So this is what I'm all about. And there are people that are with disciplined trading strategy with DTS with me. And some of them are, they just want to get the fish. They come to the trading room. They subscribe to the long-term letter, which is doing great. And some people want to learn, and some people want to do both. So whatever you want to do is fine. And I do want to point out long-term something else is that we're coming into, this has been the most unusual year, 18 months in the market in a century. Certainly, I've seen nothing like it in the 20 years. And if you think you're going to sit there and just keep long positions going in a swing or long-term account and make money, you're just going to be dead wrong. So the question I have for people always is, are you real comfortable? If you have a long-term portfolio, and by the way, I have been bullish. I was bullish for 11 years, starting back at the low in 2009. Published bullishness, and I said it would be a decade-long move. I took off that bullish bias earlier in the year, and I'm not yet bearish, but I guess you call it the ready stage to be bearish. Long term, I'm talking about. And if you're uncomfortable, you should be. And the way I run my long-term portfolio, the one you can participate in if you want to, is I always have a blend of long and shorts. I look for unique stock positions. So I make money when things go up, I make money when things go down. It's doing great. And the point of it is, if we turn around and fall, I usually should and probably will make more money if we drop than when we go up. So that's something you have to consider, especially in the market we're in right now. There's a picture of the website, free stuff page. I know it's early. I can still have 12 minutes, but I'll get Sherry caught up here for our next speaker and stop and take any questions that you have. That's why I wanted to stop a little bit earlier. So Sherry, let me know if we have any questions. What do we got?
All right, Paul, we have Robert was asking, what time zone is it when the market opens?
Yeah, I am so sorry, everybody. I should have said that immediately. I have a note here to do that, and I didn't read it. Everything is Eastern. Everything is market time. In other words, to me, I don't know why I get mad about this. Anybody talking about stocks should be talking about Eastern time, because that's New York time, and that's what we refer to all the time. So everything you saw was Eastern. I live in Florida, so for me, it's not a conflict, and I never think much about it. So I apologize. You could probably see those charts. I can go back to them real quick. You can probably see those charts. They open at 9:30. You can see that there, right? So
9:30
I'm
Eastern
talking
time.
about the opening 5 minutes of the day, 30 minutes after open, an hour after open being 9:35, 10 o'clock, and 10:30 reversal times. Okay, my apologies.
Okay.
And by the
Always,
way, go ahead.
The market opens in New York, right?
Yeah, to me, yeah, there's nothing to talk about. I live in Florida. The market's in New York. There is no other time to me in the world.
Well, like Traders Exclusive is based in Central Time, so that's why all of my stuff is in Central Time. So
Yeah, I know.
I may need to revisit that.
Well, I really meant to emphasize that because I know you're in Central Time, and that was my bad for not doing that. Another question?
All right. Yeah, we got another one there. Yes, sir. I hope I said that right. Yes, sir. Do you trade swing trades as well, or just day and long term?
Great question. And I'm impressed that he or she picked up on the fact that I kind of jumped from day trading to longer term. There is a video on the free stuff page. And by the way, the screen you're seeing there, the free stuff page has tons of videos, and I'll get your question, but when you go there, only the most recent ones are there, the last 12 or 16. You have to click on the archives page, and it goes back 4 years. So there's so much information there. Here's some of the favorites you may want to look at. To me, they're my favorites. And then I actually had the members vote, and the top 5 were put in a category called Hall of Fame. So when you go there, if you're just inundated, go to the Hall of Fame or look at these videos here. So the reason I said that, because one of the videos on the website is called Beware of These Two Time Frames. One of the time frames I warn people about is swing trading. Now you have to draw a line here. Swing trading, if you're like working a job, whoever asked this, and you're trying to get your entries after market, before market, I warn you, it's extremely difficult. As a matter of fact, it's too difficult for me to do. Daily charts don't supply you the reward to risk. They're very tricky. You probably stop out of things the next morning. So I warn people not to do that. Now, if you're getting your entries intraday, if you're able to be with the market the opening hour or all day, and you can come down to an hourly chart to refine swing trading entries to hold. That's great. I call that hit and run swing trading. So that's fantastic if you're with the market part of the day. But I think it's extremely difficult. And I have to add, it's unfortunate, but you were probably pushed to do that. That's one of the most common terms out there is swing trading. And why is that? Well, a lot of people are working jobs, they can't day trade, they want to be active. What does their broker say? Their broker wants them to be active as possible because that's how they make money. So if you can't day trade, boom, get in there and swing trade. But it's an extremely, and I bet you're having a hard time. So my long-term letter is for longer-term positions that you'd be looking to hold for weeks. Now, sometimes we get lucky, we get a target in 3-4 days. That's a great trade, but generally they're intended to be held for weeks. And in the room, a lot of stuff I identified can be held overnight for a couple of days, but I don't have a separate service that is just swing trades because I think it is one of the worst time frames you can be trading. Done.
All right. Oh, I think we have one more that just came in. Bill Slusher. Okay, so wait a second. He's asking about, so I don't know if you got your audio to work or not, because all you need to do is log out and then log back in. And yes, there is a recording that is going to be available so you can watch this later. Now, Paul also says, I am an ES futures trader. How much of your individual stock trading info is applicable to me?
Great question. I trade futures too. As I explained, let's say honestly, I'm a very patient person. I'm probably more patient than most of you listening to me. I'm not patient enough to trade one entity only. So I trade the market futures. For those of you listening, ES refers to the S&P futures. I trade those occasionally when the market sets up perfectly, but I don't have the patience to do that. Now, what I teach applies 100% to futures, to stocks, to Forex. It simply does not matter. Don't let anybody ever tell you you need different charts or moving averages or whatever if you're trading Forex or futures. Just not true. So educationally, it's absolutely identical. I trade futures, there's no difference. Futures is just simply the market. It's the sum of all stocks, nothing is different. In the room, I give market commentary continuously because I use the market as a backdrop, as a bias for what stocks I would prefer to look at. But I'm not giving constant futures calls, if that's your question. So there's constant market commentary. I occasionally do futures, but my focus is stocks because I think you have that added edge of having the market for a bias, long or short, and then focusing on the appropriate stocks that are set up correctly.
All right.
Any more questions? Sure.
Now is the time, folks. If you had a question, it's time to put it in there. We've still got a few minutes, and I know that Paul would love to answer them for you. We did put the link for the free stuff page up. There's a ton of resources on there. I'm blown away. Paul, you also gave us your email right at the very beginning, so everybody can scroll up in the chat. Okay, so we just had another question come in. For a new trader, now I'm not sure if this is a question or just a comment, but for a new trader, day trading won't be too fast. I don't know if that's a question or not. Yeah, okay. Sir, you might want to.
Nope, great question. I understand it.
Oh, good.
There's different ways to day trade. Day trading can be anything. There's a picture that a lot of day traders have of, like sitting there, with a bucket underneath you, not to be crude, on a 1 minute chart and just hand on the mouse constantly. I'm not like that at all. I kind of drop back to a 15-minute or 60-minute chart. My style, although I look to get in aggressively, my style is to try and let part of the position play out all day. I leave the screen. I'm gone often 2-3 hours in the afternoon. Everybody knows that. Around 10:30, 11 o'clock, I say, see ya. I call it the walk away. I'm all set for the walk away. My goal every day is to try and have some profit or maybe near my daily goal in the bank, either through having sold something or with stops in a certain place, and then to let the rest make a good day for me if I can. That's the goal. Not every day happens, but that's the goal. So I'm not a hyper scalper is what he or she's referring to, Sherry. I look aggressively to get into some stocks, but then I kind of try and get a fairly quick first target, maybe 20, 30 minutes, and then the rest plays out for the day. Also, the stocks I trade, my main focus is a day trading list of 300 stocks that are the highest volume stocks in the market. So usually these are very, very attainable stocks, because it's just a fallacy to take a stock that's doing 300,000 shares a day and think you're going to get 1,000 shares or something at 9:31 in the morning. It's not going to happen. So the stocks are pretty tradable 95% of the time. You can very much follow along, because I give a watch list to everybody usually the night before. We spend a half hour preparing for the day. You know exactly what I'm looking at. We boil it down to a hot list. And if you want a great example of what the room's like, if you go to the DTS website, which you have the link to the free stuff page, if you look to the left, go to the letters and what's it called, the trading room and letters page. And then if you scroll down to the trading room description, you can click on there, and there's a fantastic description of the room, and it shows you examples of the watch list you get, what the posts look like, everything that's going on. So basically, by the time I'm ready to do a trade, even though it may be 9:35 in the morning, you've heard about it, you've seen it, you understand what I want to do. Whether you want to do it or not, of course, is up to you. I'm just showing you what I'm doing. You do whatever you want to do. But for the most part, and I say 95%, because occasionally something comes up quick, it just does. But the vast majority of the trades, they're prepared, they're planned, you know what's going on, you want to participate, you can.
Perfect. Let's see, we've got, is the nature of intraday market movement changing from the previous decade of buy the pullback market?
Well, another great question. Let me start off by saying technical analysis never changes. And again, I don't want to offend anybody who maybe has said this in the past or you've heard, but it bothers me when I see emails that say, learn the new strategies for 2021. That's crap, excuse me. But if you know technical analysis, you know how to read a chart. And that's the real point in the answer to your question. Nuances change all the time. I mean, just if you're in a very bullish market, you have to treat it a little bit differently than if you're in a mildly bullish market or if you're in a sideways market. But it's not something new to learn. It's just observing the charts. And when you understand technical analysis, levels may set up in a different spot, but none of that really comes down to mattering. So is this whole year been goofy? It has. We've seen things we haven't seen before. The biggest thing to me that's been different is the complete lack of market correlation. I talked to you before about having a market bias. Well, it used to be that 80–90% of the stocks kind of followed the market bias, but nowadays we have completely different sectors. A new sector is developed called, I call it the Rona stocks, but the coronavirus stocks, the airlines, hotels, casinos, you know, they're their own group right now. They move together. I mean, it's not always been the case that you saw a cruise ship and a cruise ship and a casino necessarily move together, but they do today. So those little nuances change, but it doesn't change if you learn how to read a chart. I call what I teach the language of charts. If you learn what you're doing, you're bulletproof to anything that happens. So has the intraday market changed? Well, I would answer that two different ways. Yes, it changes every month to some degree. And no, nothing ever changes, because your job is to understand what you're looking at and to interpret it, and through your use of technical analysis to come up with the right answer all the time. Done.
Oh, wow, awesome. All right, everybody else, there are a couple left, but we're out of time. And I really appreciate
Email me, Sherry.
I
Yeah,
will.
I put my email there. Oh, you put it out there. Okay.
Paul at disciplinetradingstrategies.com. And you just need to email him. You need to go check out that free stuff page because that's got a ton of information there. And Paul, thank you so much for being with us. It was really awesome. Thank you.
Thanks for having me, Sherry. Take care, everybody.
Have a good day.
You too.
All right, folks. We are going to bring on our next presenter. He's with us. He was just with us last week because, and he stepped in this week because we had a last minute cancellation. I really appreciate it, Dan. He's going to be talking to us. It's Dan Passarelli of Market Taker Mentoring. And he's going to be talking about this week's top option trade ideas. And this has to do with how you're going to make your summer, your dog days of summer, super profitable. So Dan, it's true that as a trader, it's your mission to empower yourselves with the knowledge you need to invest successfully. And that's why we wanted him back again today. He's a trader, he's an author, he's a world-renowned trading expert, former member of the CBOE and the CME. He's a frequent contributor to Bloomberg Business Television, Fox Business News, CBOE TV, and a resource to journalists. And he's an invited speaker educating traders for organizations such as NASDAQ, CBOE, the International Securities Exchange, CME Group, Fidelity Investments, TradeStation, the Street.com, and the Shanghai Futures Exchange. And that's just the tip of the iceberg. He's also a marathon runner and a musician and a world traveler. And I would like for you to please welcome Dan Passarelli. Dan, let me bring you to, there you go. Thanks for being with us today, very, very much.
Thanks for having me, Sherry. I really appreciate it. And
take it away. Now I see your screen, so
excellent.
I'll just mute myself and give it away.
All right. Well, hi, folks. How you feeling today? I'm Dan Passarelli, and thanks for joining me. Today, I'm going to share how you can get the top trade ideas in the market every day so you can trade with the confidence of having a 30-year trading veteran that worked for Goldman Sachs, mind you, give you hands-on training in the market every day. That sounds pretty great, right? So let's see here. Before we get started, I want to point out options are not for everyone. You should read characteristics and risks of standardized options before trading. Get a copy of that by calling 1-888-OPTIONS. All right. Let's make sure we're all in the right place here. Who's here? Give me a yes if you're here to get serious about your success. Go down to the questions box. Give me a yes if that's why you're here, because you want to get really serious about your success. Yes says Michael, yes says Thiago, yes says Narish and Yasser and Kim. Cool. How about this one? How about I'm here because I've either felt frustrated before, or maybe I feel pretty good, but I want to have more confidence and more consistency. Yes says Michael, and yes says Kim. Yes says Ryan. Got some more? Yes says Thiago. Yes says Yasser. Okay, now they're rolling in. Great. How about this one? I'm here to learn and share in a supportive community. That's the great thing about this stuff, isn't it? Give me a yes if you're here to learn and share in a supportive community. Yes says Yasser. Yes says Kim. Yes says Michael. Yes says Thomas. Definitely says Thiago. Hugh. All right. And how about, hey, I'm just happy to be here. That's pretty great too. All right. Now, I want to thank you again for joining us today. It takes, a level of commitment to invest in yourself by showing up in a webinar like this. And look, I understand that as much as anyone. You're the kind of person that's willing to make that kind of investment in yourself, and I love that. Warren Buffett once said the best investment you can make is an investment in yourself. The best traders I know invest in themselves and do it fearlessly. Those of you who fearlessly approach not just the market, but fearlessly approach your trading enterprise and to taking action and creating success for yourself, you're unstoppable and you can get massive results. Amazing things happen when you have no fear, when you are that committed. Now, the reason I'm sharing this webinar today is that I was thinking about trading resources, and I thought, we can't just all call the hotline when we need a trade idea or we have a trade that's in trouble, right? It'd be nice, wouldn't it? So I figured I'd hold this webinar to share with you exactly what the key market drivers are and what our community is thinking and what our plan is for the rest of the summer and to give you some trade ideas from our head coach, John. Now, here is what I'll share today. I'm going to go over strategies from the MTM trading community. I'm going to go over some market analysis and Coach John's, aka Johnny Cat, his trading plan and the top trade ideas that are happening literally right now. And then at the end of this presentation, I'll show you how you can take the next step and make all this really, really easy and gain consistency in your trading. That sound like a fair deal? Give me a yes if what I said is really exciting and you think that's great. Yasser says yes. Thiago says super. Norbert says yes. Kim says yes. Thomas says yes. Ryan says yes. Michael says yes. Excellent. Excellent, excellent. Sonny says yes, sir. Perfect. Now, once again, I'm Dan Passarelli. I'm the author of Trading Option Greeks and the Market Taker's Edge. I'm often on TV talking about the markets. I work with many of the options exchanges all around the world and probably all the options brokers in the US and outside the US. And I've helped traders just like you in over 50 countries to become successful traders. Now, I want to talk a little bit about the MTM community. And speaking of community, let's start out talking about my education in options trading. All right. The day after I graduated college, I put on the only suit I had, printed up a stack of resumes on fancy paper, because that's what you did back then. And on a rainy day in May, I went downtown and I knocked on every door of the Chicago Board of Trade building. And lo and behold, guess what happened? I got a job. My first day out of college, my starting salary for that job was $9,000 a year. That's right. Let me enunciate. Not 19, not 90, $9,000 a year. A four-figure salary. Now, all my friends were making like 40 grand a year or something, but I was making under 10. I had to work a bunch of odd jobs and live in the rat-infested apartment I had. And yes, it actually did have a rat at one point, by the way. I was making at least $30,000 a year less than everyone else I graduated. And I was a clerk for 4 years. I figure I left at least $120,000 on the table. $120,000. That's what I paid for my education. But I felt it was important. I learned from the traders around me by asking questions. And I found myself surrounded by hundreds of the top traders in the world. And I learned enough to knock on a door and get a better job. And that's when I found a coach. I was a trader's assistant to a guy named Gino. And Gino taught me everything I needed to know. All you need is that one coach. And it had a ripple effect on my life. It saved me so much pain. And I know that this is a unique situation that not everyone can do. Like, you probably can't quit your job, move to Chicago and work for $9 grand a year for 4 years. So I thought, how can I bring that same experience to our traders? And so I created the MTM community chat room. So within the MTM community chat room, it's a community of our top traders and all of our coaches, and we share information and we share trade ideas and we help each other. I just posted 4 trade ideas in the chat room today for our community. These are some of the ideas of trades that you might see in the chat room. And by the way, at the end of this chat, this presentation, I'll show you how you can become a part of that chat room for free. Now, if you could invest $1,000 and it paid you back $5,000 within a month, would you do it? Let's see who we're dealing with here. Let's see who has this, what we call an investor's mentality. Give me a yes. If you could invest $1,000 now and it paid you back $5,000 within a month, would you do it? Narish says yes. Yasser says yes. Kim says, of course. Thiago says definitely. Ryan says yes. Michael says yes. Thomas says yes. Sonny says, sure. So listen, a couple of weeks ago, actually, now that I think about it, it's a lot longer than this. I installed one of those Google Nest doorbells. You know what I'm talking about? It's got like that camera on it, and you can talk through. You can be in like Hawaii, and somebody rings your doorbell, and you can like talk to them like you're at home. Well, I wanted to save some money, and I just figured, well, I'll figure it out myself. It comes with instructions. I'm a smart guy. And as the project unfolded, I came to realize that I have an old doorbell chime unit from 1982. And if you ever looked at the wires in this stuff, especially if you have a house with more than one door that has a doorbell, there's like a whole bunch of different colored wires in there with no logic, no code or anything to it. And I was dealing with a bunch of unknowns. And I'd never seen this before, and I didn't know what to do. So after wasting a good 5-6 hours of my time, and look, I'm a busy guy just like you, right? We all are, and time is money. So I called an expert. He's seen it all before. He came by and fixed it within about 10 minutes, explained it to me so I understood. And next time I see something like that, I will be able to recognize it and fix it myself. Now, I want to go through the overall market first, and then some specific individual trades. So the S&P 500, which you can trade with shares of spiders, SPY, it might be forming a top here, right? If you're watching this live, we had the ADP number out this morning, and it added 330 jobs versus 333,000 jobs versus 653,000 jobs expected. Big difference, right? That's why we're seeing a little bit of a pullback here. Failed to make new highs for the last couple of days, and we got a pullback. Now we also have the Delta variant, which is turning out to be something that can really drag on the economic recovery, unfortunately. It has the potential to cause unemployment to continue and keep seeing this and just drag this whole thing out and thus hurting future revenues, right? Now, that said, analysts have been revisiting their earnings estimates upward for this quarter, and they were revising them pretty strongly last week and the week before, but now it's at a little bit of a slower rate than it was last quarter. They're still revising them upwards, but at a slower rate than last quarter. Curiously, the VIX has risen along with the S&P 500, which implies what I like to call cautious optimism. I was just talking with Abigail Doolittle from Bloomberg Television, and we had a conversation about this. Cautious optimism. And that's cautious optimism at best. More likely, I would say maybe nervous hedging. Now, the VIX term structure is in its normal contango, which implies, if anything, traders do not expect us to come out of the perceived precariousness of the market anytime soon. It's more likely than not that we get a little bit of a dip, which if that does happen, would provide an excellent buying opportunity. So that's sort of the MTM take on the broad market. But what's more important here is that we narrow in on some excellent opportunities in individual stocks. So this is a stock, CARR, Carrier Global Corporation, and they build like filtration systems at schools. At least that's one of the things they do, which is enabling kids to go back to school with, with this COVID thing still happening, because it filters the air apparently. And that's why we see their stock really took off over the last couple of weeks. I mean, really, it took off over the past 6 months, this whole chart length, but it's on a little bit of a tear the past couple of weeks. And so I want to point out here that this analysis and all the rest of the trades that I'm going to talk about through this presentation are from Coach John Komisik, who is the ex-Goldman guy that I talked about. There's a class that he teaches every day called the Market Taker Group Coaching class. And that group coaching class, it's every morning, and he shares the top trade ideas of the day that he's learned to identify from his years with Goldman Sachs, Lind Waldock, First Options of Chicago, the hedge fund he worked with. And so I got to give credit where credit is due on these, because John is a super smart guy. This is one of the trades that he talked about just today. So he did his analysis, and it's not just, and I'm bringing up John right now because I don't want to sound like I'm oversimplifying this trade. John's got his own proprietary analysis, and he identified this as a call buying opportunity. Now, look, the overall market is down today, but this is one where he talked about buying the September 60, call. And when you get momentum like this, bouncing off the 20-day moving average and the 50-day moving average, and you get it stepping up after earnings especially, there's a lot of follow through to go through with this one. And buying the September options, I mean, look, he wouldn't be holding this all the way until September expiration. He buys the September options when he buys calls because they're longer term and they have lower theta, right? And of course, with trades like this, he lets his profits run and cuts his losers short. This is kind of like a trial, right? Like when you put in a stop order, you're doing a trial that has huge payoff and small loss, because like a trial where there's very low risk and very, very high profit potential has tremendous value, right? So that's basically one way that I would describe this. Now this is in the Qs, and this I would call a strategic overpriced options selling play. So the Qs, QQQ, right? It's got some support here below the market. It's got some support at that 20-day moving average. It's got some support at 360. It's got some, really about 361. And so, and for those of you who are really, really in tune with implied volatility, and if you're not, that's okay. John breaks down these trades every day and talks about these things that are important and kind of coaches you and teaches you how implied volatility works. And so look, John's trade was selling the August 6th expirations. That expires in 2 days. 361, 363 bull put spread. So that's selling the 363 put that expires in 2 days, and a Friday, and buying the 361 puts in the same expiration. And the advantage of doing this is that it's only a couple of days. Support just has to hold for a couple of days, and there's a statistical advantage because the options are so expensive. They're like gigantically overpriced. So it's not just playing a support level. It's not like guessing it'll go up. It's really factoring in a number of things that professional traders do, especially that implied volatility level. And this here is a play which I like to call an overpriced non-bearish options play in a stock. So this is conceptually the same, but QQQ is the market. I mean, it's, tech stocks, growth stocks specifically, but we can break that down farther and look at pretty very specific unique plays. So here, whenever we get to an area like, these $5 marks here, you can usually see some support or resistance develop there. And we definitely saw that at the 145 level. And I talked to John about this morning. He kind of coached me as to what to talk about these. So we've got support at 145. We've got more on that green line. That's the 20-day moving average. And we've got overpriced implied volatility, and that just makes it a perfect storm to trade these options literally like a professional trader, like to take all this data and decide if it's a statistically advantageous trade. And so like we're taking the guesswork out, and we're really like teaching you to be mathematical, and look, not just teaching you, it's kind of earn while you learn, right? Like giving you these trade ideas right now, and John does it every day, you know. Now this trade is in NVIDIA, and I like to call this one a strategic low risk directional trade. So NVIDIA here, it was trading at 146.75 this morning. And so what John did, I think I got the wrong strike posted in here. Sorry about that. Disregard the strike. I got the wrong strike. It must be the 150. What John likes to do a lot of times is he likes to take these things that we call calendar spreads, right? He takes the calendar spreads and he invests a very, very small amount in them on a speculative directional trade. Now, speculative doesn't mean, hey, he's just taking a shot and guessing. He still goes through all his analysis on the daily webinar and shows mathematically why it should hit this target. And if it does hit the price target that he's talking about, he gets a gigantic, highly leveraged windfall profit. And so this was a pretty near the money. Again, disregard the 200 there. I think I have a typo. Oh no, I don't have a typo. I've got the wrong chart up there. Oh, geez, Louise. All right, I missed that one. Here, you know what? I got an idea. Let's go to let's just go to the live chart here. NVDA. There we go. So it was the 200, right? So basically the idea is if John just simply, if NVIDIA stays around 200 just for the next 2 days, John can have an extremely highly leveraged profit. All right. And so that's kind of the genius of his methodology. Now this, I'm just going to call this a nice play and be done with it. This is a trade that he talked about on Monday in Zoom, and I think there's still a little room in this one. On Monday, he talked about the August 6th, 355, 360 bull put spread. And I hope you guys are writing this stuff down, right? The Zoom August 6th, 355, 360 bull put spread. Definitely still some room in this trade. A lot of it came to fruition today, which you would expect on a trade setup like this. But he sold the August 6th 360 puts and at the same time bought the 355 puts. He collected about 75 cents on there, and it's sitting really pretty right now. He was able to do it at a really nice price on Monday because the stock dipped down below these moving averages and ended up closing above them. Very, very strong sign to close above the 200-day moving average, tested the next day, and today a decisive move above it. Now there's one more trade that I'd like to share today, and that is in CRM, right? This is Salesforce.com. This is what I'd like to call a professional setup that's actually really, really easily done. So this was a trade that John talked about yesterday in CRM. It's the August 6th, August 13th, 240 call calendar. And so what he does is he buys the August 13th 240 calls and at the same time sells the August 6th 240 calls. What's nice about this is he's got very, very low risk. And as you can see, the two moving averages, 20 and 50 day, are kind of converging. We're forming a little bit of a triangle, which at some point we'd expect to see a breakout, but not yet. And if we just stay around 240, maybe one more day, he'll be able to take a really leveraged profit. He put this on yesterday at $1.40, and if tomorrow it's still trading right here around 240, you know, he'll be able to take a nice, very, very high percentage leverage profit. And so I want to be really clear about what we're accomplishing here today. Yes, it's really, really helpful when I'm sitting here giving you these trade ideas that, you know, are in play, that you can trade now, and a lot of them, if they work out, you can get highly leveraged profits with low risk. It's great to get these trade ideas. But what's really important is going forward, right? Being able to know what's working, not just the specific idea, but conceptually what's working, which is kind of why I'm giving you some of the ideas. Is a professional trade setup. You know, this one was, you know, a strategic low risk directional trade. This one was an overpriced non-bearish options play on a stock. So it's important to understand, like, if you get one trade idea that makes money, that's great. But what do you do tomorrow? What do you do the next day? Like this is what's really important, isn't it? So let's talk about the rest of this month. Lessons learned. This market can make you money with low risk, and in some cases, like what I like to call low risk trial, right? Where you're putting in a little bit, you risk a little bit, and you can make a lot. It's a low risk trial. And it ends up being your choice whether or not to participate, right? And a lot of these make sense to participate. What you choose to do impacts your life. And in a market like this, it can literally have a huge financial impact on you. And I also want to talk about getting your information, right? Trading is an information business. I can remember the last trading firm that I worked at. In fact, I can remember all the trading firms I've ever worked at. There was always an analysis desk. The professional traders would rely heavily on the analysis desk, which was a designated person or small group of people who do all the research, and they pass along the trade ideas to the traders for final analysis and execution. It made it so much easier for traders to make money and to make more efficient use of their time, right? Make sense? They let someone else do the heavy lifting, all the research, all the complex analysis. And they, the traders, then got the trade ideas, and they were the ones who traded it. It was their trades, and that's why they made millions of dollars. But the ideas often came from the analysis desk. And another thing that's important is following the smart money. There are people who live these markets every day. These are the people you want to follow. Meet John. He's pictured on the left. John always likes to say, I found that our most profitable group coaching students are the ones that are most prepared. Being prepared is important, right? How well do you think it would work if you jump out of a plane and say, man, as soon as I hit the ground, I am taking lessons to learn how to use this parachute? It might not be a brilliant plan, would it? As I like to say, learn first, then trade. And the more you keep learning, the more profitable you become. But learning always precedes and leads to greater ease and success as a trader. We have a lot of students doing really well right now, but I also hear of people who are not. And the people who aren't are failing because, well, maybe they're not as prepared as they could be. Not having a decent starting point, not having a plan. When they put on a trade, if you don't have a plan, you can run into a lot of trouble. This is Dave from Malvern, Pennsylvania. He's one of our group coaching students. He says, I went from an average of 30 to 40 trades a week to 5 to 15 a week. Much more selective in what I trade. My account has grown 53% in the past 90 days. I've been really, quotes, lucky lately but wanted to thank you for giving me the foundational knowledge to apply to my practice. Now, how often can you find great option trades like this? 3 words, all the time. Great trades exist literally every single day. All right, in a few minutes, we're going to take some questions, but I want to talk about what we covered so far. The most important thing we're going to talk about comes next. We talked about strategies from the MTM community, market analysis and Coach John's trading plan, and the top trade ideas right now. What we didn't have time for is how to move forward from here, how to consistently discover the best trade ideas every day, management plans for each trade, and all the pro tips, like how to use implied volatility analysis, how to use the Greeks on option trades, and other tools. So let's talk about how to consistently make money in the market now and going forward. We're going to walk through this simple process together. I'm going to share it with you. This is how you take your trading to the next level. I believe anyone can take money from the market consistently with low risk. And why do I believe that? Because I have seen it. The only problem is most people overcomplicate it. They take the hard route. And look, I've done this in my own life. When I first started with a Market Taker, I didn't know how to build a website. I tried, do email, blah, 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 shoot videos, all video editing. I didn't know how to do any of this. I tried to figure it out. I spent about 80 hours a week the first 2 years that I was doing this. And, I barely had any traders that I was helping because I spent all my time trying to figure out all this dumb stuff I didn't know how to do. And then I realized something very important. You know what it was? You can buy experience. And that made my life so much easier. I was instantly able to just have somebody show me what to do. And then I could literally help thousands of traders instead of spending all my time frustrated trying to figure out stuff on my own that somebody else already knew how to do or would guide me on how to do it. So introducing the Market Taker Live Advantage Group Coaching. In this course, I'm going to share with you the top debit spreads, credit spreads, time spreads, iron condors, butterflies, double calendars, and more trades that we identify in the market every single day. So you can stop guessing and risking your hard-earned money on weak trades that underperform, so that you can generate consistent low-risk profits and make your trading simple and stress-free. And here's just some of what you'll learn. How to easily scan the market for high probability trades, how to select optimal strikes and maximize your probability of success, how to select the optimal expirations to maximize your potential profit, which strategy to use under different market conditions, rules of thumb for ideal income trade setups, planning exits and entries, really fine-tuning on those, how to set up profit and loss targets. That's so important. How to adjust income trades when they go wrong. Oh, so important. How to be more confident in your trading and how to avoid common traps of novice traders. So you now have a new opportunity to take your trading to the next level, to benefit from decades of experience, to benefit from a team, to maximize your profits and chances of success while minimizing your risk. This is for you if you want more consistency in your trading. You want more frequent winners. You can follow a few simple steps. You are fearless and ready to be the trader you always knew you could be. And some of you are so close. Now, who this is not for is the get-rich-quick goofballs. It's just not that kind of a thing. And it's also not for indecisive traders, which is kind of an oxymoron. You can't be indecisive and make money trading. And it's also not for people who like doing things the hard way. Some people are okay failing over and over again, losing money for years until they finally get it right. Look, the market is an expensive teacher. As they say, if you think education is expensive, try ignorance. With trading, missing out on 3 years of trading profits and losing money during that time instead of making it is about 1,000 times more expensive than education. That's why we created the Market Taker Live Advantage Group Coaching. In this daily trade room style webinar, you're going to get the top option trade ideas real time, along with the management plan for each trade. This is a $349 a month class, just $349 a month to get John's expertise and trade ideas every day, to get his management plan every day, and to make your trading simple and stress-free every day. But we want to make sure that you feel great about joining this class, and you should. And so to make it so you can fearlessly make the decision that this is for you, you're going to be online with John every day in this class for the next month. John is a former Goldman Sachs guy. We're going to give you access to the recordings every day and from the past 3 weeks, in case you ever miss one or that time's not convenient. This class is every day from 10 to 11 Eastern. That's 9 to 10 Central, and it's all recorded. So we're going to make this impossible for you to say no to. And we're going to give you some bonuses to make sure that this will work for everyone, no matter what your background is. So first, you're going to get 1 month of the Market Taker Live Advantage Group Coaching class. And then we're also going to give you a month of the MTM Community Chat Room. And then for those of you who are new to option trading, and maybe you're not sure what implied volatility is or what a calendar spread is, you're also going to get the Options Impact Quick Start video series, which is a $497 value. And then you're going to have questions. Maybe you'll have a trade that might go wrong and you need some help. We're going to give you access to the hotline, the MTM email hotline, which is a $500 value. This entire package is $1,445. And again, you're going to be online with John every day in the class for the next month. The 10,000 hour rule states that if you do something for 10,000 hours, you're an expert. John has been in the live markets every single day for the past 30 years. Given just weekdays for an 8-hour day, that comes out to John having over 50,000 hours of experience. So we want you to join us right now by going to markettaker.com/99 for just $99. That's market, like stock market, taker, like take what is rightfully yours, 2 T's in a row, markettaker.com/99. And maybe Sherry, would you be able to post that into chat? And I'm going to answer some questions while we're at it. Oh, she did already. Sherry is 1 step ahead of us. I'd like to take some questions about this package or any other questions that you have. As soon as you enroll, you're going to get instant access and you'll be able to sign up for tomorrow's class, which begins at 9 a.m. Central or 10 a.m. Eastern time. It goes for an hour. You're going to get the top trades of the day, as well as the rationale behind the trade. I like to refer to this as a trade alert service on steroids because it's earn while you learn. With a regular trade alert service, you get the trade ideas, and sure, that's useful, but if you don't understand why you're making the trade, if you don't understand what the management plan for the trade is, when and why to take it off, it doesn't help you as much. This helps you because you understand exactly why you're making the trade, and you're not the last to know. If you miss your text, and get into the trade an hour later, the trade might not be any good anymore. With this, you're getting the trade real time, so you're the first to know. Kenton says, is the $99 is for 1 month? How much to continue? Great question, Kenton. So normally with the trial like this, look, when I sign up for classes on various things, obviously not trading, I've been doing this 28 years, but when I sign up for anything and I take a trial, I expect that after the month is over, I pay full price, right? That's how it usually works, but I don't believe in that. So what I'm going to do is, if you join today for $99, and let's say maybe you make $5 grand this month on trades John gives you, right? You're going to want to stay in the class. You get to renew at 35% off for life. That's $227 a month. Now I say for life, there's no long-term contracts or anything. You don't have to renew after the first month. In fact, 27 days from now, we send you an email that says, hey, how do you like this class? Do you plan on staying in it, right? But if you do, like if for example, you make $5,000 on John's trade ideas, obviously you're going to want to stay in it. And we're going to save you thousands of dollars over time if you're in this class, like many of our students, for years and years and years. So yeah, so Kenton, the answer to that question is you renew at $227 a month for as long as you want to stay in the class. Great question, great question. We have a few other frequently asked questions. When is the class? It's every day from 9 to 10 Central, which is 10 to 11 Eastern. Is this live or recorded? It's both. I know you have a busy schedule, and so the live component is recorded for people who can't attend live. Do I need special software? No. If you have an options-friendly brokerage account and you're watching this webinar on GoToWebinar, you have all the software you need. You don't need to buy anything else. Is this class good for ETF, stocks, both? If it's a top trade that can make money, John will find it and tell you about it. So, you know, in order to take advantage of this, it requires an investor's mentality. It requires taking one step and investing in yourself by going to markettaker.com/99 and join us right now. I'd like to welcome Kim. Congratulations, Kim. Welcome. Thanks for joining us. Sunny just joined us. Sunny from New Mexico. Congratulations, Sunny. Great job. Michael from North Carolina. Congratulations. Great job stepping up and investing in yourself today. Oh, I got some questions popping up here. I'll get to the rest of you folks who just joined us in a minute. Ken says, is it entirely options or swing trades, etc.? So these are all option trades. John is an expert, one of the global leading experts in the world on option trading. He's actually been invited to China about, I want to say 8 times. I had the pleasure of going with him to train people there. He trains internationally, people in over 50 countries. He is the world's leading expert on options. So that's what all these trades are. And some of them are swing trades, like some of the ones you saw today, and some of them go a little bit longer. The average hold time is anywhere from 2 to 10 days, I would say. Robert says, for $99, I will sign up. Yeah, I don't blame you. Hey, welcome, Thomas, and I'm sure I'll see you in a second. Yasser says, is it for noobs as well? Absolutely. In fact, for those of you who are very new to option trading, that's what this bonus right here is for, the Options Impact, I call it the Quick Start video series. You'll watch these 8 videos first, and you'll be trading like someone who's been trading options successfully for a lifetime after watching those videos, and then you'll know everything you need to participate into John's trades. Looks like I'm out of time, but welcome to the new folks. That link is going to be valid throughout the rest of this webinar. Thank you for joining me. Welcome to all our new group coaching students, and let me turn it back over to Sherry.
Thanks so much. I really appreciate it. You guys, you really have to go and check this out and get in. That's a killer deal, a killer deal. Thank you, Dan. Appreciate it. We'll see you soon, eh?
Thanks, Sherry.
All right, have a good day.
See ya.
All right, folks. We have Marina waiting to start her presentation with us. I just want to let you know she's going to bring us a message about become a profitable trader, get back to the basics of day trading. And it's Marina Villatoro of the Trader Chick. And she is waiting here already. Just wanted to introduce her a little bit. She specializes in helping people day trade with confidence. She's been trading financial markets for years, using trial and error to gain insight. When Marina began trading E-mini futures over 8 years ago, she realized that no one was teaching the most important part of trading, and that is the basics. Reading and understanding the market language. It speaks to us loud and clear, and being able to understand it, truly understand it, will take your trading to a whole new level. So I want to welcome Marina. I appreciate you being with us today. I'm going to make you the presenter. And now you should be able to share your screen. And let's see. I'm not hearing you yet. Hey, there you are.
Okay, great. I had myself on mute. Hi, thank you so much for having me.
Thank you, and I'll let you take it away.
Okay, I don't see questions here. Is there a place
do you
where
like
I
to
can
have
hit?
them throughout? Do you want
Yeah,
people
I'd
to
like to have
wait
full
until you're
access.
okay? Just a
No,
second.
I'd like to have them there. Yeah. Hi, everybody. Thank you so very much for being here. I am really for the questions because I am here for you guys. That's literally the goal for this chat, for this summit and presentation, is so that we could kind of work together. The reason why you guys are taking the time out of your own day is so that you could learn. And I always find when we're interactive and talking and questions, that's the best way to learn. So please send me all your questions during the presentation. I will definitely make sure to answer them all. So I just wanted to again say thank you, and let's jump in. I am Marina, the Trader Chick, and this is me. And today I want to do a quick coverage of the basics, right? The basics is really overlooked in pretty much everything we do. And remarkably, when we go back to the basics, that's when we can really start to do really well. So today I want to talk about a few things: day trading versus investing, busting some myths about day trading. You'll be surprised the myths that hold you back, what to trade, the different trading lingos, brokers, commissions, movements, and technical analysis. So before we go in, I do want to just give a quick intro of who I am, because I find that we forget that we are humans, and just sitting in front of charts is really not what day trading is about. It's who we are as a whole, the people who we are. I'm an expat in Guatemala, living in Antigua, and that's me and my two boys. And before I became a day trader, I actually was a fitness instructor and a travel writer. And really the main reason I bring this up is because the amount of people that say to me, oh, but I don't have a financial background, I don't have a math background. I don't either. To this day, you do not need that at all for being a successful day trader. I also speak 3 languages, and mainly the reason why I bring this up is because I found that the market in the financial markets is its own language. And when I learned my 3rd language in my later years, I was able to understand that it's a very similar process, right? So I'm originally a Russian refugee. I'm a refugee from the Soviet Union, I should say, and Russian is my mother tongue, but I was raised in the US, so English is my main language. And now living in Central America for over 20 years, I speak Spanish fluently as well, but I did learn in my later years. So that's why I was able to understand that the language that we are listening to in the market can truly, truly change everything. And then we see it like that. That's the most important thing. And the most important thing about day trading is that we can literally work from anywhere. How cool is that? That is the beauty of trading. And why can we work from anywhere? Because it's about a laptop. It's not about having multiple screens or anything like that. You could take your laptop anywhere you want to go in the world. And I was also featured on The Money Show, Traders Expo, Mint. I've been all over teaching and talking about my simplified version of trading, because I totally believe we all can do this together and it's accessible. Now, I have a free worksheet for you guys that you could go and get right now at makingofaDaytrader.com. You could go and get your free worksheet that you could follow along with this presentation, makingofaDaytrader.com. You guys could go and get it right here, right now. Now, let's hop in and let's talk about this. What in the world is day trading? What is in the world for day trading? Is this for noobs as well? Absolutely, Asir, that is the goal. All right, guys. So one thing it is not investing. So unlike day trading, you do not want to diversify. I get so many students people that come to me, okay, I want to learn how to trade Forex, options, equities. Well, it's kind of like getting into 3 cars at the exact same time and driving at the same time. It's so different. And not only 3 cars, but 3 totally different kinds of vehicles. It's not the same as investing. Investing, we can diversify because we leave it and let it do its thing for ages. We could look at the different things, but with day trading, it's today, intraday. You focus on what's going on today. It's literally like a music student, right? You want to focus on one instrument. Imagine your child coming up to you and saying, hey, I want to learn how to play a musical instrument. And you're going to be like, oh, awesome. This is so cool. What do you want to play? Oh, I want to play the drums, the guitar, the flute, and the violin. And you look at your kid and you're like, well, it's probably a good idea to focus on the one because a violin does not play anything like a flute, right? So it's the same thing with day trading. You want to focus on the one thing. Now, investors, whoever is an investor, I personally invest in I have a very diversified portfolio. So what I do about investing, I care about the company that I'm investing in, right? I'm going to care if Apple is going to be coming out an iPhone 13, 14, 20, right? However, when I'm day trading, I don't care. I don't care because I only care what's going on in that moment with Apple or whatever you choose to go through, right? So investors, we want to see the company grow. When you're day trading, you don't care if the market is going up or down because we can make money either way because it's for the day, right? It's all about the day. And if the market is going down, which we day traders make way more money on the market going down, you want to be able to get in on that technical analysis and enjoy that. Now, let's talk about the myths of day trading because these cloud people's heads and really stop them in their tracks. One thing for sure, that it's risky. Day trading is risky, it's a gamble. Well, I'm going to go back to the car analogy. If you hop in a car, you've never been in a car before in your life, accidentally somehow managed to turn on the ignition, do you really think you're going to be able to take that car on a highway and not crash? Well, you'll be saying to yourself, of course, that's super risky. I need to learn how to drive. Guess what, guys? You need to learn how to day trade. There is a strategy behind day trading. The reason why it's considered risky is because 95% of the people who are quote unquote pretending to day trade, basically just donating their monies to the markets, don't even know the difference between a long and a short, right? So how can you possibly drive in a car if you don't know where your clutch or the accelerator is? It's the same thing here. Once you actually have a strategy and really understand day trading, the risk is eliminated and it's not gambling because now you're actually really doing it. You need $25,000 to get started. Total lie. Crypto, you can start with 10 bucks. Forex, 100. Futures, $500. Even equities today, you could start with a very low amount, right? Because there are so many different ways of doing this. You do not need to get started. You do not need a lot of money to get started. That is a total misconception. Like I said earlier, you need to be a math whiz or with a financial background. No, I honestly cannot figure out even how to do my grocery bill. You do not need to have any math whatsoever and none of the financial background or economics. No, at all. Why? Because it's all about technical analysis. It has nothing to do with numbers or what's going on with the financial stuff. It's about seeing what the chart and the market is doing in front of you. It's too stressful and chaotic. Well, if you've got this going on, it can be. This is such a lie, guys, because whoever is sitting in front of all these charts and all this going on, they are not a healthy individual and it is not sustainable, right? I was watching this really awesome, funny old sitcom. I don't know if you guys ever seen it. It's called King of Queens. It's a really cute, funny show. And the main character, he just bought himself this 96-inch screen television, and the show's kind of old. So back then he also bought DirecTV, which had like over 1,200 channels. And him and his buddies are sitting in the TV room and they're flipping the channels every 30 seconds. And one of the guys is like, stop, you're gonna trigger my epilepsy. And honestly, for sitting like this, it's not going to trigger your epilepsy. It's going to totally bring you to completely a stressful meltdown. You do not need all of these. I trade with one chart, 2 indicators. That's it. Simplify your life. And indicators, again, You know what the business is for day trading? The main one is selling softwares, indicators, bots, and algorithms. The only people making money with that are the ones selling it. I have yet to meet a single human, single trader that ever bought anything and said that it's actually working in their favor. Number one, when you have softwares or anything technological, you have to do updates and upgrades. Guess what? They're writing to you, hey, if you want to continue with this, you got to give me another $5,000 for it to work because we just upgraded. Total lie. You do not need any of these. All the indicators that you're going to have is from your charting software. You buy a charting platform. That you cannot deny, right? You cannot be a Formula One driver in a minivan. You need the proper equipment. And the only equipment you need is the platform. And normally good platforms, they come with indicators, universal indicators. Research and news. Okay, guys, I'm sure a lot of people sit in front of those news, obsessing what the quote unquote experts have to say. Here's the reality check. Those experts, they all have an agenda and they are selling you their agenda. The only reason why we're listening to them is because they've made billions, but you know what? They've also risked a lot. And it is actually a fact. You could go and check this online. We all heard of Mad Money of Kramer. I actually love him. I think he's super entertaining, but it's an actual fact that only 35% of what he suggests works. That means 65% of what he's saying doesn't. So remember that whenever you hear the news. And usually it's a bunch of telenovelas. It's who cheated on who and who did this and who did that. It's just gossip. Ignore it. Ignore it and focus on the technical analysis. Market research, guys. If you're doing technical analysis, you do not care if Apple's coming out with a new iPhone in 2 months because today it doesn't affect it, right? All right. Another really huge misconception, especially for newbie traders, is the trigger happy thing. Non-stop being in and out of trades. And this is a real thing. Even when I first began, I was going in about a 2-hour session, I had like 40 to 60 trades. It's so stupid and ridiculous because even if some of those trades worked, I always ended up losing on the commissions. Think of yourself as a hunter. I know it's not a good analogy, but it's a really powerful one. Why? Because if you think of a hunter, they will not go out and just start shooting tiny little insects. They're going to wait for the big game. Traders, we wait for those good, solid trades. And if you have a strategy, you get them. And I always say the most radical way to win, to trade, is conservatively. Being conservative is sustainable. Aggressiveness never works. Small profits daily bring you big profits yearly, because going for those big targets, which look really great on paper, realistically, you have to put up a lot of risk. Okay, so remember that when you want to go for those big targets. So if you have the smaller targets, which is much more sustainable, you'll end up actually be a successful, consistent trader. FOMO. Have you guys heard of FOMO? Fear of missing out? I cannot even tell you the amount of FOMO, fear of missing a trade, goes on with traders. And you know what that means? That means you're trading emotionally, chasing trades. And one thing for sure, and I can guarantee this, they never work. Emotional chasing trades never ever work because you chase a trade, the second you get in, it turns on you, you lose money, and it spirals to you becoming a revenge trader, eventually losing your entire account. There is always another trade coming. There is always another trade coming. If you miss one, who cares? There's thousands others coming. Now, what to trade? Like I said earlier, people, when they first begin, they want to trade it all, right? And it's funny because whenever I mention to people that I'm a day trader, oh, I want to learn how to trade the stocks as well. Did you guys know that stocks or equities are only 25% of the tradable markets? I bet you guys didn't know that, right? So right now, I want to break this down because it's all about honing in on the one instrument. And if you guys get anything from today, find your one, master that one, and then move on to the next. All right, so let's talk about the different markets so you guys get a real idea about this. Forex, we've all heard of Forex. This, by the way, is the #1 market in the world that's trading, right? What is Forex? Foreign exchange. What do you do on a foreign exchange? You trade pairs of currencies, one currency against the other. Is it a good idea to do many? No. Even in Forex, you want to niche it down to the one currency, one pair. Start there, master it, move on. Equities, like I said before, stocks. So when you tell me, oh, I trade stocks, so I want to trade stocks. Hello, there's 5,000 different stocks out there. So what are you going to trade? All of them? No, you want to niche it down. How do we niche it down? By sector. Figure it out. Maybe you want to just do sectors, pharmaceutical, technology, entertainment, or there's quite a lot of very successful traders that are only doing Amazon, Tesla, Facebook. They're really niching down to one because you get to learn, you get to see it, you understand their technicals. Or you could go into big caps, small caps. Yes, penny stocks too. I don't recommend penny stocks. It's the most manipulated, totally mafia run market. So there's really little that you could do because those pump and dumps, you have absolutely no control, even if all your technical analysis lines up. Futures. Okay, even with futures, we know futures as the commodities market, right? Where you could trade crude, oil, soy, wheat, but you could also trade indexes. You're not going to trade the S&P index versus crude the same way, right? They're super different, totally different markets. So even inside this particular niche, the futures, find that one instrument. I personally trade the ES minis and that's it. It's a gorgeous market, super volatile. Why do I need to do more? And options. Options are great. So stick to options or don't do options, but you can't do it all together. And don't forget, guys, the emerging, beautiful crypto world. It is awesome. It is erratic. It is volatile. It is bonkers, but you can do really well in it. And if you're going to say, oh, I trade crypto and think that it's a Bitcoin, then again, you shouldn't be touching it because a Bitcoin is one out of the 6,000 different projects that is part of the crypto world. There are altcoins, there are projects, and there's Bitcoin. So figure it out if you're going to do it. Don't just start putting money blindly. That is always going to bite you in the butt. Okay, let's quickly do a demystification of brokers and margin accounts. First and foremost, what are brokers? Brokers make money when you are trading or putting in positions. Either they are taking your commission or banking on your losses. They don't want you to be educated. The last thing you need to do is worry about going live with a broker. But if you have money with your broker and you're still in simulation mode, guess what those brokers are going to be doing? They're going to be selling you their services. Hey, why aren't you trading yet? Hey, why aren't you using the money in there? Don't fall prey to that, okay? Because their one goal is to make money off of you. Do you want to be that sucker? No. Wait until you are ready. Now, what is a margin account? I call this the #1 loan sharking scheme that brokers do. What is a margin account? It means that they will lend you money if you want to buy more than you have. Okay, I cannot even tell you the amount of people that lose money like this. So you see something that you want to buy, you don't have enough, but you told your broker that it's okay to be with a margin account. All of a sudden, it looks like you could actually do a lot more than you have. You buy, you lose. Guess what? Not only do you have to pay them back the money that you just lost, you have to put an interest on it. Don't do that. You can tell your broker, I don't want a margin account. And guess what? They're cool with it. They'll take it off, but they will want to scam you if you don't know the difference. So you be the smart one. Tell them no. Okay, understanding commissions, live feed, and quotes. A lot of stocks right now, you could do commission free, totally cool. However, you can't really do that with futures, Forex, crypto. You have to watch out for the commissions or the fees, right? So if you want to trade crypto, are you really going to go to like one of the mainstream people right now, like mainstream brokers that do everything? No, you want to stick to a crypto exchange because that's their specialty. They're going to give you the greatest fees, right? If you want to do futures, again, find a futures specialist broker. They're going to give you the best commissions. Now, if you are a day trader, you want to make sure that you have live feed. That does not mean delayed feed, because if you're delayed, you are not a day trader, you are an investor. You want to have live feed in real time. Sometimes you'll need to pay for that. Sometimes your platforms give it to you for free through your broker. You need to do your due diligence. You have to understand the difference, okay? And that is a really important difference. All right, guys? Platforms. As I said earlier, you need a platform. You cannot trade without a platform. There are so many amazing platforms out there today, and they all come with universal indicators and drawing tools and feed. So you can have everything you need in your platform. So make sure you do your research to see which one works. There's so many. Thinkorswim, Kraken, MetaTrader, TradingView. I mean, there's so many. Just do your due diligence. Learn which one you work with best. A lot of them give you free access so you really understand and can work with it. Okay, but you cannot be a day trader without a platform. You cannot be a Formula One driver without a car. You cannot be a professional violinist without a violin. That's just how it goes. All right, let's do a little bit understanding of trading lingo. Intraday, guys, you're in and out of your positions in the same day. If you're holding overnight, you're not an intraday trader anymore. You are a swing trader. Okay, understanding trends, bull market, super easy, market going up. Bear market, market going down. If you don't know those two terms, you should not be giving your money to the markets. And there are three very specific trends: upward trend, downward trend, and the sideways trend. If you don't understand the sideways trend, get out right now because it will eat all of your money. Super important, profit target and risk management. You cannot win in day trading if you do not have a profit target in place, because greed will always win. Oh my goodness, it's going up, I'm going to remove my profit target. You take it out, boom, it goes against you and you get stopped out if you have a risk in place. Because a lot of people also like to have a mental stop, which is total lies. None of that works. You will lose all your money. So have your profit. Take at least a portion out right away. Boom. Have a risk in place so you never lose more than you are willing to risk. Super important. I'm going to go back to the charts. If you don't have a chart, you don't have anything. You're just playing with your money, and you're literally just giving and donating your money to the market. The market has enough money. It does not need your money. Indicators. I've mentioned that quite a few times. You need indicators. I use two indicators, and that's all I need. So if you're going to be looking at indicators, really understand what their benefit is for you. Do you really need 100 indicators? Do you really need 10 indicators? Can you work with maybe 2 or 3 or 4? You want to simplify. You don't want to go into analysis paralysis. It can get you every time. And again, going back to those trending markets, there are 3: upward, downward, sideways trend. Upward, downward, sideways trend. All right, guys, those are your 3 important ones. If you don't know the differences, stop right now. Now, I want to talk about this. This is really important because I can't even tell you the amount of people who are in the live markets and don't even know what a buy or a go or a long is. So what is a buy and a going long? Super simple. You are entering the market at a lower price point, exiting it at a higher price point. You are buying, you are going long. Selling or going short, shorting the market. What is that? It's when you're in a downward trend, you are selling. That means you are entering the market at a higher price point, taking the profit as it goes down in between. You are selling, you are going short. Okay, super important. Now, we are talking about day trading, in and out of trades within a day. What is day trading? It means that you want to go for the specific profit target, right? So if you're just going in market, that is showing the market that you are an amateur and you don't know what you're doing. And it's saying, because you're an amateur and because you think you could outsmart me, I'm going to take even more money from you. And that's called slippage. What does that mean? So you do not ever want to go at market. You want to tell the market where you're going to enter, and that is called a limit order. You are putting your order in and you're saying to the market, I want to go in only at this price point. If it doesn't fill me at this price point, I'm not going in. Okay, and it's the same thing with a stop limit. You need to have a stop in place. You're telling the market where you want to be stopped out. You do not want to market stop. Why? Because again, you're telling the market, all right, I want to close out here. So not only does it close you out there, but it's also going to take even more money out because it's called slippage. It doesn't take out where you press on the market. It always goes a little bit to make sure it takes out the money. All right. Technical analysis, guys, I've mentioned this 100 times and I'll mention it 1,000 times more. If you don't know your technical analysis, which means reading what the market is telling you, reading the language of it, you're never gonna succeed. I'm gonna show you a little bit of that right now. Okay, what is technical analysis? It's basic. You could do it at any charting software. Indicators, areas, divergences, reversal patterns. That's what it is. So what's an area? What are areas? The two most important areas that you need to know, because the market will respect them over and over again, is resistance and support. What's resistance area? It is literally where the market visits and hits over and over again the ceiling of the market. It is here. You have to have this drawn in. You cannot have these in a mental way. You have to have them in over and over and over again, because this is where the market hits it over and over and over again, and it revisits it. And if you're going in and it's constantly hitting, you're going to be stopped out. So you need to know the difference. What's a support area? It's the floor of the market. It is literally where the market is hitting over and over again. And a lot of times when it does this, it can totally transition to a new trend. So why would you keep on going short when you don't know what the market is doing, and wait until it tells you what it's doing? And how do we listen to the market? When do we know what it's telling us? Reversal patterns. What are reversal patterns? It is double tops, triple tops, double bottoms, triple bottoms, head and shoulders. We have heard of them, but if you actually listen to them, I can guarantee you will completely change your entire trading game. Now, divergences. I live and breathe with divergences. I use the MACDs. So if my price action is showing me that it's going up, but my MACDs are telling me that it's going the opposite direction, what does that tell me? It's telling me the market has lost its steam and I need to sit out, because we don't want to be in and out all the time. We want to go for those highly confirmed trades. So let's put this all together. Remember, everything I just went over, it's in makingofadaytrader.com. Makingofadaytrader.com. All right, so let's do a quick understanding of breakouts. Breakouts are the most popular trades there are. If you don't have your resistance area in, you're going to miss out on that breakout, right? This is what a breakout looks like. You're going in one direction. There's indecision, but you have it drawn off. Boom, you have your breakout. Here is how I look at this. Boom, I have my resistance area here. My MACDs are giving me massive strength. Boom, I get filled. Look at this. I use my EMA lines for where I take my trades. That is where I use them for. And my MACDs show me their strength. So remember, makingofadaytrader.com. I want to do a little bit of live analysis with you guys right now. And I do have a question here about my EMA indicators. So I use 3 EMAs. I'll show you guys right here. You could just take a picture of this if you want. So my indicators are, I use 3 EMAs. I use the 52 EMA period, 20 EMA period, and the 135 EMA period. I use them all together for my trade setups. So right here, we have a pretty interesting day today, right? It has been a very thick channel, right? Look at that. There has been some places where it gives me a little bit more. However, overall, it's a pretty ugly, indecisive channel. So with me drawing in my resistance and support areas, which is the floor and the ceiling, I'm already prepared to see what the market is doing, right? That's how you understand what the market is doing. You have yourself prepared. You are putting in the hedge. You're protecting yourselves. All right, today has been kind of ugly. Yes, there has been some movement with these mini trends in between, but when I see that there is a recurring market, recurring channel, then I know to stay out of this, right? So this is how I use my EMAs. It's right here, my MACDs, it shows me where there is massive strength, where it's sticking along the zero line and very little strength as well. And that's how I use it for everything. The MACDs are my absolute holy grail for everything I do. Okay, guys, let me know if you have any questions about my charts right in front of you. Let me know if any of this makes sense, if you have any questions about the actual charts. All right, so let's go back to the presentation. If you guys do have any questions, we could go into them as well here. So, as you guys know, you have absolutely everything you need to take action, right? Everything you need. We have the YouTube videos, we have different books, we have different summits, we have everything. But the real question is, how do you know you are doing it right? Who is there to help you understand if you are doing it right? You can be watching all these different strategies, YouTubers, but then you want to apply everything, but you don't know if it's correct. How do you know if you're doing it right? So all of this is great, but the real question that you really go for is, how do I truly get started? How do I get started? And this isn't for beginners only. Seasoned traders who have been trading for ages but are still losing money also ask me, what can I do to turn this around and be profitable consistently, right? And I always say, lacking understanding of the basics is a perfect place to start, because a lot of times we don't even understand the super basics. When I talk about sideways trends, channels, the chop, exhaustion patterns, people don't understand what that is. And that is literally where 90% of the money gets lost. And that's a basic, right? It's kind of like knowing the difference between driving on a side street versus a highway. You know to take different types of strategies, but if you don't know the difference with that, how are you going to be able to apply that, right? It's literally like getting into a car and not understanding the difference, the basics of driving a car, right? For instance, I right now am in a beautiful position. My oldest son is learning how to drive a car because I've been driving for over 30 years. I hop in the car and I know where the clutch is. I know where the gear shift is. I know where my wipers are. And when I tell him, all right, let's go, buckle up, let's put it into first. He's like, put what into first? What are you talking about? I'm like, press on the clutch and the brake and lift off the accelerator. What? Those are the basics of driving. Won't you agree? So for him, it's a whole new thing. And if he doesn't understand those super basic things, even if he doesn't drive a manual and just getting it out of park and putting into drive, he will completely crash. So those are the basics, right? And funny enough, we say, all right, jump in the car and buckle up. But what if you've never been in a car? What if you don't even know what a seatbelt is? How can you protect yourself? How can you put the most important thing, which will most likely save your life, if you don't know what it is? And that's the basics, right? So my sad truth is I had spent over $20,000 on my own trainings. True story. I had been in every kind of academy, one-on-one masterminds, live chat rooms, getting alerts. I mean, you name it. You name it. Yet I was struggling and losing for years. Why? Because every single time I brought up basic questions, hey, I don't really understand divergences. Can you please explain to me what a resistance area is? I don't really understand. What do you mean by exhaustion pattern? I was either completely ignored or I was treated as if though I was meant to be born with that information. And we're not. We just, and for some reason in trading, this completely gets overlooked, but this is literally the most important thing. It's literally like you want to put in a window before you even built your walls to protect, to hold that window up, right? I mean, at this point, I lost my worst moment in trading was I lost almost $4,000 in 5 minutes. And this was after trading for 2 years and really struggling because I never really understood just basic price action. And I lost that in 5 minutes. It was a disaster. I literally ended up quitting. I walked away from the charts, from trading altogether for almost 5 months. But the reality is I was bit by the trading bug. And what does that mean? It means that it never stops itching. And why? Because deep down inside, we know that we could do this. We know because we see other people doing it and we ask ourselves, what is it that's holding us back? Why is it that I am not able to do this? And the thing is, we can do this. And when I came back to my charts after 5 months of staying away, I decided to go back to the basics, literally back to the basics, just price action and totally understanding the movement and listening to the market. I don't know if you guys have ever heard of Coach John Wooden. He is a legendary basketball coach, legendary. He is known as to be one of the most successful to this day basketball coaches in the world. And his entire philosophy of training is when in doubt, get back to the basics. This man won 88 championships, 10 NCAAs. I mean, he is a legacy. He worked with the best of the best of the best superstars. I'm talking like superstar basketball players. Yet, every time they came back after a winning season and starting a new season, you know what he used to do with them? He went back to how to tie your shoe, how to roll up your sock, how to dribble the ball, because it doesn't matter all that you think you know. Because if your shoe falls off because your shoe is untied or you have a bloody blister, guess what? You're sitting on the sidelines and everything you think that you studied well doesn't matter because you don't have the basics. And that's the most important thing. So today, only for the people that are live right now, special offer for participants only. I have my introductory course, Bootcamp for Day Trading. You could do this on any apparatus, laptop, your tablets, iPhone, desktop, you name it. This is your next step. It's either your very first step or your next step. This is the step. What you get in this course. First of all, simplifying your entire day trading package. And interestingly enough, I know a lot of people are having a lot of problems with platform setups. It took me over 5 months to figure out how to use my platform. Nobody was helping me. It was terrible. But you don't have to spend that much time. It's like learning how to put gas in your car. I have everything done, no matter which platform you're on, a 30-minute setup tutorial included. Then we get into the bones of trading, the anatomy of it, dissecting the markets, understanding those magic telltale signs, reversals, divergences, having your respect of the areas, the reversal patterns, spotting your support resistance areas. Those are the defense that you can protect yourself, understanding those market shifts, the divergences, and the mastery of the breakout. Because if you don't understand how breakouts work, how are you going to make any money? Breakouts are the golden trade. And if you don't understand how to set it up, how are you going to be able to get it? And with that, you get unlimited access to this curriculum for life. Normally, the value is $1,600 for all of this. $1,600, you get the trader's workspace completely set up so you don't have to worry about that. Dissecting of those trends, the movements, understanding and respecting the areas, the power of the breakout, and unlimited lifetime curriculum. And let me share something important with you guys, because this is back to that question. How do you know you're doing it right? Why is it okay for athletes to have coaches that they work with or super successful CEOs? We need that. And right now, included in this offer, only to you guys, participants only, you get 1 month, one-on-one mentorship with me, the Trader Chick, one-on-one, unlimited feedback and coaching. You cannot get any, like that alone is priceless. And I have one more excellent special bonus for you guys. 30 days free membership in my live trade chat room. So on top of the free one-on-one unlimited coaching, you'll be in my live trade chat room. And it's me. It is not any moderator. It is me in the live market, analyzing and implementing everything we learn, so you could ask me during the live market while we are analyzing it together, all those questions. Total value of all of this, $2,600. However, for you guys, only $97. No other fees, nothing else, $97. No hidden fees. Go here right now, bootcamp4daytrading.com. Everything right there, bootcamp4daytrading.com. You'll get everything. We'll go over everything together, working together, one-on-one, live trade chat room. $97, guys, that is less than any trade that you are going to be taking. And that I know for a fact, and I can guarantee it. $97, and you get all of that with me. Okay? So don't take my word for it. I have students all over the world, because trading, the cool thing about it, is not only for US or Canada or Europe. It is for all over the world. All right, guys? Here are some of my students. Best money I ever spent. Marina is an amazing teacher. I am a non-techie, non-math, stay-at-home mom, and this feels like I'm really catching on. So today only, normally I charge $297 for this bootcamp and do not offer the mentorship or the live chat room. $297, you're getting 66% off. $97 for you guys. Bootcampfordaytrading.com. Bootcampfordaytrading.com. Here's one really quick thing, guys. I only have 25 spots because of the mentorship program, and I want to really focus on all of you guys. So go here, bootcampfordaytrading.com. And as you can see, not only can you do this for $97, but if you want, you could start even lower, $59, starting off right away, and you get everything right away. So remember, bootcampfordaytrading.com. Okay, guys, I see there are some questions here. Explain the good and the bad on the MACDs. So Robert, I love the MACDs, and I'll tell you why. It is the least lagging indicator that I have found. So many indicators are lagging. What I like about the MACDs is that it really tells you in advance when the market is losing strength or gaining strength, and that's where you really want to learn, right? Thiago, do you use a high time frame? No, I only use tick charts, 610 tick charts. That means that each bar shows me 610 ticks. It is literally the volume inside the bars, and that is in real time. So I don't have to have a volume indicator, and it's beautiful like that. Robert, when do you get in and out of the MACDs? So that's part of the strategy, understanding how to use the MACDs, understanding divergences with the MACDs. That is the strategy, and it has been my most perfect strategy. So guys, I have to go right now. I just want to say thank you super, super much. And one thing, again, bootcampfordaytrading.com. If you have any questions, you could write to me beforehand at thetraderchick@gmail.com. But $97, guys, that is less than a trade that you're going to be taking, and you get to work with me one-on-one for one entire month, and also be in my live chat room with me for 30 days. You can't go wrong, really. $97. I mean, come on.
Crazy.
It is crazy.
Are you crazy? Are you crazy? Oh man, that was fast. That was furious. That was great. So guys, take advantage of that. I have put the link in the chat. Just copy and paste it. I put Marina's email address in the chat if you need to ask more questions. And I know you've got to go, Marina. I really appreciate your time today. I appreciate your presentation. Thanks so much.
Thank you so much. And thanks, everybody. And I look forward to seeing you inside the course. Bye.
Awesome. Thank you. Bye-bye. Okay, everybody. That was Marina Villatoro, the Trader Chick. And I just wanted to tell everybody this has been a presentation of Traders Exclusive. You can follow us on Twitter at options_info and on tradersexclusive.com. This, you will get an email from GoToWebinar letting you see that the replay is up. We'll also be putting that on tradersexclusive.com. You'll also be getting follow-up emails from every one of our speakers. So I hope that you'll give them at least an open and a look-see. And please go back and look through there and get a hold of the offers that really tweaked your interest. And most of all, I'd like to say thank you to our presenters for joining us. And thank you for attending. This is your host, Sherry, saying trade well.